the star of the show.
Is it called Leo Trader? I don't know what you do, Leo, so I know that's not the topic, but it sounds cool. And congrats, sounds like a good deal.
Oh yeah, he's the transportation captain. Yeah, I think he said that before. He brings all the equipment and
Oh Jesus, so
millions of
okay.
dollars of equipment for shooting
No
that.
Leo means no production. I gotcha.
Exactly. They don't like when he tells them, "Sorry guys, I'm in a trade. I'm gonna have to get back to you."
Dude, if you I don't know about the States, but in Europe, I would say add an extra 40% on gas,
Oh my God, dude, it's
just,
crazy here too.
just to cover your expenses. Be on the safe side.
Yeah, the gas has been pretty expensive.
So
But
what's the is that your tracking? Is that should I know the chart?
this is what Top Take gave me, and I I mainly used it when I was tracking the open, and we are kind of in a different market environment, and I was trading under overs. Um, so, what did you guys think about the tracking today? I know some of you guys are tracking. I'm not sure. Mugen, I don't think is here, but maybe he is. But I know he was doing some real intensive tracking. But what I want to do is start tracking. This is for under overs. Is mainly what I was using it for because it was my favorite setup. But recently, over the past month or so of the market, there hasn't really been under overs, not good ones at least. So trading it is not that great. But trading just J line rejections have been really good later in the day, and this past week I noticed we had more pop and fails or over under whatever you want to call it, um, which is kind of like the opposite of under over.
Can't you get these same stats using TraderSync? It looks like you can. That's just
No,
a format.
nah, I don't think so because um, I mean you can kind of look at the charts and say uh, you can see like the entry and exit time of the trade and trader stink. You can see if
Yeah.
it's a win loss, but you got to answer the question: was the market gapping up? Was the stock gapping up or
Oh, I
down?
see. But you'd
Um,
have to put that in notes.
yeah, so you just if you put notes on it where you just open up your chart, you'd be able to do that. But for the under over, I told Top Tick I was like, hey, I want this like really simple, so it's just easy to do, you know. And what Jay was
Did you
saying,
top tick or is that top tick's work? So did you do it top tick or is that
Top Tick created this whole thing, and then I just filled it out because one day he was sharing with us how he has his, and his has like all these different setups. He tracks all the fib levels. Um, I don't know if his mic, if his speakers he said was working, but he uh, he he tracks it a lot more detailed than I wanted it to be because I wanted it very simple. So you just put in like 4 or 5 things. Because with the under over setup, you want to know like was the market gapping up? Was the stock gapping up? What was the pre-market action like? Was it holding the J lines? Was it chopping or below the J lines? Because that determines if it's an A plus setup or not. And then the open location is important too of the under over. And then the best trailing method, which is important for big caps, which Jay was mentioning to us. Like, is it a 1 minute candle? Is it using the 9 MA 20? You know, so those are different trailing methods. And then the final target of the opening drive I was tracking was it did that under over make it above pre-market high or below? And just to show you my stats, because some people get like really detailed and make all these crazy stats, and then I feel like sometimes it doesn't help them as much because it's just so much information. but like I try to keep this simple, and this said like out of the um, this is like the win criteria for all the under overs. Um, and then this is just some of the data that I put, but this is where it gets good. Um, so in the pre-market, 47% of them were holding the J lines and then chopping. So none of like the under overs that I took in the pre-market were they like trading below the J lines for 5, 10, 20 minutes, you know? And then the other thing right here in this like little section, the open location. So 53% of the under overs that were working uh, were above the J lines at the open. The best trailing method was a 1 minute candle 67% of the time. And look at this, the final target, it made it above pre market high 73% of the time. So if you imagine an under over and you're opening up above the J lines and it's setting up kind of however you see that under over and you're watching the price action in the tape, 73% of the time it was getting to pre-market high, which that's a pretty high percentage, right? So that's why these were my favorite setups at the time, uh, when we were in more of a bull market, I would say, because I could tell where it was going to go, and it just kept doing the same thing every day, just about. But what I want to do now is start tracking the J line rejections and a couple of other things because these under overs they're just not happening right now. It's
Do
kind
you
of a
usually,
pocket.
sorry, do you, is that like for, do you maintain that sheet for a year, or for, do you do it on a quarterly basis or a monthly basis, or how do you
Um,
track it usually?
so with tracking, uh, I track it when I need to be tracking. So right now, lately, we've been seeing this whole change in the market. There is no under overs that are happening good, because we're not seeing these gap up days and then strong moves to pre market high. Yeah, exactly, Fox Bear. It's the under overs work better in a bullish market. That's 100% true. Right now, are we in a bullish market? No, we're like in the
No,
middle.
yeah,
You know?
yeah. The over unders happen rarely, but there's a specific pre-market price action condition where are gonna see a real good one. And I've been tracking it every 2 weeks. So I came up with like certain things that you see on price action, right? And what happens is that I showed it to Jay, and I asked him, listen, how often should I track this? And he's like, refresh your stats every 2 weeks. So that's what I'm doing.
Okay,
I've been,
that makes sense, because then you always have, like, a certain kind of history in your percentage, but it's not like,
Yeah,
not 6 months or so at the time that.
yeah. Which is that's the better way to do it because when you're tracking it regularly, you'll see when the stats start to change on your setup that was working, and
mm,
you'll see like for instance, if I was regularly tracking the under over there, where was it? Here, I would have started to see even sooner that they weren't reaching pre-market high, or it was chopping even more. You know what I mean? So you start to see these change in your statistics, and then you adapt faster to the changing market environment, which
So,
is really important.
so Toptic, you've created a slide like this for every setup.
Yeah, Toptic, can you maybe
well,
send a screenshot or something? Uh,
that's
or
what I created for Eric for under overs. I think we were using it for under overs, right?
Yeah, just under overs. I wanted to start doing the J line rejections, and maybe we can go over the scalping a little bit because lately we've just been having these amazing J line rejections every day, and I've been spotting them. I mean, just every day.
Oh yeah. Yeah, I'm tracking price action things about J lines because like there's two types, right? You have the one where it's ready trending, it pulls back to the J line continues. You have the one that's basically goes back, stops you out, resets, continues. And then you have the one that's sort of, so the one that stops you out, resets, continues. There's two ways to trade it. One's divergence. Once you wait for the 5 minute turn, flag and curl. Um, that's it. That's all you need to know. You gotta really just find out what it's doing, and then if it's doing type one, type two, maybe type three, and then you just react.
So you're
Uh, Doku, by the way, is a combination. So
yeah. So one more time, can you explain that top tick? So if it doesn't do a perfect J line rejection and it resets or curls back up, so then you're waiting for like a 5 minute signal.
two things. Yeah. So you see the first J line rejection on Roku, or sorry, Doku. I think people traded this, right? So it just goes up to the J lines, tags it, and then works for a little bit, reverses, right? That's one type. The other one is it goes up. So this is the reset, right? So this is the second wave here. It breaks out, um, but and then at some point, the 5 minute chart. If you look at the 5 minute chart here, it's gonna turn down right about the second lower high. You see that the second. I know you traded this to Eric. The second lower high over here. Um, yeah, the one with the green arrow. Yeah, so right about sorry. I'm gonna just annotate, I guess. Uh, this one. See, and then by the open of this big drop candle, on the break of maybe on the break of this, it already that's where the turn is happening, right? So by this point, um, that would be the by textbook entry. But also, if you look at it, sometimes you have a J line rejection where it goes above the J lines. But if you look at the volume, there's actually a divergence happening. I mean, you can't see it as clear over here. I use some other indicator, but this top right here, that's a divergence.
where
Um,
where
right.
it pops up and then fades
Yeah.
back down and
Yeah. Because um, I can show you. Um, hold on.
okay.
I think I had a picture of it. One moment. Oh yeah, right here.
So
Yeah.
in the meantime, while you look for the picture, just one more question to that spreadsheet. Do you have a black belt in Google Sheets, or how did you come up with that?
He does.
No, I mean, I I just have some time and I just looked up how to do certain things, and like I don't actually I don't claim to be like an expert in Excel. There's people in the room that way more can do way more with Excel. But yeah, I just had the time. I'm that type of person. When I want to do something, I obsess about it, and so like
Right.
I don't sleep. Maybe I just go to the washroom and I don't finish till it's done. So yeah,
I mean, that looks pretty awesome.
thank you.
Yeah,
Well
you
done,
guys,
well
Top
done.
Tick is being modest because he's been trading for years and he has a lot of experience, and so that's how it kind of evolved, in my opinion, to such a nice spreadsheet.
Yeah,
That's
that's probably a better way. So this was a
Like you see,
multi-layer complement topic. Is like A, you obviously know what you need to track. So there's a lot of thought into that. I can see that, and then plus you have the ability to put it in a spreadsheet. So congratulations on both.
yeah, that's why, you know, I kind of asked him when I saw his because he was sharing it at one time. I was like, listen, instead of me writing everything in every time, like he's got these like drop downs and you just click away. So it
Yeah,
makes it so
it looks
easy and it
super
auto
convenient. I
calculates.
mean, yeah, that's fantastic. I mean, I would love. I mean, that's not for today, but like, yeah, awesome. Top tier,
Yeah,
um
great job.
everybody but everybody needs like slightly different data. I mean, some of these things are very generalized, but sometimes you want to have some different adjustments. So you're
Oh, sorry, the other one, not this one. Yeah. So, um, okay, this is actually tracked. I mean, I guess I can send Eric the stats. So I've been tracking price action commonalities for the different setups that Jay does, and this is basically okay. So you see, it goes up right to the J line VWAP, right? So it's like this is A plus. You see here when you look at the volumes, it's dropping down ADX, which is this yellow line in the volume here, right here. It's like minus 30 or minus 20. That indicates to me that this support for the meantime is going to hold. So when you look into this, you're like, okay, am I going to trade the top, or am I going to trade a flag? No, I'm gonna try to go ahead and take a top. And now that you know this is happening, you're like, okay, well, I'm just gonna look at the tape. Again, try a soak, or maybe risk off like a heat map, and then trade it down. And then at the same time, when it starts crossing 50, the stochastic, I'm probably gonna trail. I'm gonna trail break even at that point, and then I'm out here. So it does the second wave, right? Uh, okay, right here in the fib, where the fib is, right? You see the second wave. The price makes a higher high, so like divergence, right? See divergence. At this point, if you want, you can enter. You can risk because it's already diverging, so you can just risk above the fib. Start and then. But the real trade, I guess, according to textbook, is the 5 minute turn and curl. So at this point, right here, you see the 5 minute is turning exactly at the same time, right? So this is in real time. If you watch this, okay, it's turning now. It's breaking out the heat map here, and at the same time, you're seeing the indicator flash green, red, green, red, green, red. I mean, from green to dark green. In real time, that's what you're gonna see. And you just basically trade, risk off J lines, and then trade down. Now, based on my tracking, I mean, I guess this thing happens about for the last. I think I've tracked 1 week. Uh, so far, the last batch, 5 minute turn and flag. Little, okay, that's not really. It's 5 minute turn. So it's about it only happens about, I don't know why it's only 20% of the time. That's probably like last week, which is weird. Um, and then yes, there's just basically different percentages on how rare or how common they are. But the first J line rejection here is common, where you have like ADX drop down to below 20, and then it's tagging the J lines, and the chart is showing you exactly something like this. This happens, well, last week. Um, what 30%, I think, 39%, 39% of
where 39% of what, where it pops into the J lines and tags it and then drops back down. You're saying
yeah, exactly.
so it's like a quick move. Which those
Yes.
ones, you guys, I don't usually like to take, but that's just me personally. I like to
Yeah.
see it kind of really get up there, consolidate, weaken with the price action. The volume is declining, and you see like an inside bar, and then it starts to roll over.
Mm-hmm.
But that's just me personally. Now, uh, top take.
Uh-huh.
Question about the J lens now. Where are you seeing them the most based on your stats? Like where is it happening the most? Would it be 10 o'clock? Is it 10:30? I know it kind of varies.
Yeah, it varies. So I've been noticing something. I have not tracked it yet, but when you get a price action where in the morning it just drops, right? Just drops. You're probably gonna get a J line rejection around before 10:30, at 10:30, 10:45, and then continue. If it
10:30 to 45. Okay.
Yeah, if it opens traps, oh no, double traps, got everybody now, and does something like this. Right. The J line rejection will fake out, reset, happen between 11:30 to 11:45.
Okay. Yeah, this is a trickier, much more tricky to trade. What he's saying, you guys, is depending on the price action of the open, you see those J lines come later in the day or earlier in the day. And this is once again where tracking is really important because, in my opinion, some of the best trades right now are the J line projections. Why? We're in this bearish market. The sellers are totally in control. And at the open right now, we're seeing very choppy price action. I typically can scalp at the open. I can be very fast, but lately it's not even worth it. The RR of the trades are not worth even taking some of the trades. Are there some good setups? Yes, but the majority of the time there hasn't been lately, and that's where waiting for a clear setup. Once the choppiness slows down at the open and we set a trend, that's what Jay's saying. Wait for the trend. Wait for the trend. You see the trend, and then you wait for it to start pulling back, curl up, set that J line rejection.
A lot of what you're talking about happens during Globex with the ES. We've had some really good trades, 30, 40 point trades in the ES during the Globex, uh, basically on trend moves and J lines.
Yeah.
Yeah. Uh,
Y- yeah. Also, the type of over unders that would work nowadays would be where in pre-market. Oh, by the way, sorry. J line rejection best intraday if you have a breaker PDR open below PDR, or at some point during the day it just breaks out, right, and then it's doing the J line rejection.
so the so the best ones are below the previous day's range. Those are the best J line rejections. You're saying.
Yes, and the best JLCs are on those days where the daily is already extended, and then now you're having a break, maybe above like a pre-market or even a previous day's high, and then now you see all the moving averages on correct formation, and then you're getting the J line curl. Those are the best J line curls. They're normally counter trend because we're in a bearish market, obviously, but counter the main daily trend, but you see them work. And it's even better if in the daily you have the 5 daily and the 9 pointing the correct direction. So if you want to trade the J line rejection, the 5, the 9, preferably on the daily, should be pointing, 5 should be under the 9. If you're trading bullish, the 5 should be over the 9. It's simple as that. And then because it's momentum indicators, right? 5 and the 9. Um,
So
That makes sense. Total
So the
sense.
best J line rejections you're seeing are below the previous day range, and then the best J line curls you're seeing when it actually is above the previous day range. You said.
yeah, above PDR, maybe even counter trend and um,
Yeah, we're not getting a
above
whole lot of those right now.
above pre-market. Okay.
Above pre-market high. Okay.
Yeah, above pre-market high, but the daily's already extended. Daily's already extended. So you and then you have all the moving averages pointing up. So Yeah, you have all the moving averages on your 1 minute pointing the correct direction. 135, right? 135, 1000. Or not even, sometimes not even 1000. Just 135 is fine.
So, so you guys hear what he's saying. So for a J line curl, so we're going long on a J line curl. It needs to be the best ones are preferably above pre-market high and above the previous day's range. And why is that significant? Even though we're in a bearish market, is because what's going to happen probably soon here is we're going to have these very big squeeze days where it the stocks just go up all day,
Well, they're
and
taking out the stops.
they're taking out stops, right? All the short sellers are saying, right, Leo?
That's correct. Yeah, they're just it's price discovery at higher levels to take out stops. It doesn't mean that you have new buying and big money buying coming in
No,
to
no,
play.
no.
It,
Yeah,
it
Exactly.
it's just stop runs.
Yeah, it's short covering rally to go ahead and trigger
yeah.
stop runs.
So one of these days coming up, you guys, we're gonna see. Maybe it'll be next week, or 2 days, or maybe it'll be like in the following couple weeks, where you're gonna have this mindset of saying, "Okay, I'm looking for a short because that's what's been working. These really nice fades." And then we're gonna have this special day where the market just runs up, and it's done this many, many times, and it's going up, and then you're just thinking, "Why the heck is it going up?" Like, and all these longs are just perfect, and maybe you're trying to short it. So be prepared for that,
Right.
because when you think it's going to be a weak market, that could be the day that they're squeezing it. And what Top Tick is saying is, if you're paying attention and you're saying, okay, the market's going up, I tried a couple shorts, if they didn't work, now I'm waiting. Now we're above pre-market high. We're above the previous day range, and the market's just going and going higher. You just wait, you step back, and you wait for the first J-line curl to happen there, and there's probably a good
Well,
probability that it works.
those have been the toughest days for me because there's not much pullback. So you have to shorten. I think you may have to shorten your not from a 9 EMA, but maybe to a 5, like he's saying, is like when you get a very small pullback, then you take your trade because you're not going to see much of a pullback or a J line
Yeah,
curl.
Yeah,
that's true.
It's just going to keep running. And
I
those are the hardest times for me that I've ever experienced is just when the market takes off. I don't know where the hell to get in, and I've missed 30, 40, 50 points.
so that's like an example of what Jay would call, you got to kind of scalp off of the nine, or sometimes what I say and what we've talked about before is joining a trend. There's a technique and a strategy for kind of hopping in when the trend's going. Let's
Yeah,
say it's that really strong
that's something I
trend.
have to learn.
Yeah, and it takes practice, But what Jay says about hopping into a trend essentially is taking the trade as close as you can to the nine, and then you're just trading off of these little micro flags. Here was Apple the other. What was this? Yesterday, right? And this is an example of it going down below this blue dotted line, which is pre-market low. But if you flip this chart in reverse, it's the same thing for if we were going up and we're above pre-market high, and it's not really pulling back to the J lines yet, but you want to hop in. What you do is you get in, and then you're risking essentially the high of the candles at the nine, or you're risking the nine. And in this case, I was able to, um, you draw the micro flag like this, the micro trend line, and you're trying to take the break, and you can take it at the break, which normally it used to be good, but what Jay was saying when it comes to shorting at least is short the pops. So this thing consolidated and it pops up like this. The candle goes up and it looks like it's going strong and making a new 1 minute high, and then it starts to fade down slowly, and then you short that as it's fading down and making a fake breakout, and then you can get into a good position, and you kind of use the nine to trail. And see, I covered here, and then it makes another pullback to the nine. I added and added, and then it went sideways, and I didn't make it work anymore from there. But if you flip this in reverse, it's the same technique for going long on that day where the market's running, it's bringing everyone's stop on the short side, and it's just going up, 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 and it's not really pulling back. You look for these little micro flag patterns and you try to trade up the 9. Or, you can try to tighten it like Leo was saying. Some days when it's the VIX is up, I will widen the stop to the 20, and just see if the 20 was working better than the 9. So sometimes I kind of adjust my moving average to see what number is working
But
well for the stock that I'm watching.
also, just to keep risk management in play is widen your stops, use less contracts because you're going to get a bigger move in the end.
Yeah, that's what I'm adjusting to. Usually I trade with such a tight stop, but with the market being the way it is, and it feels like every time I get in with a tight stop, the algos just pop right up to get me,
Right.
and that's where doing the feeler size is really important as well. Um, and when you take a feeler size, it gives you a good opportunity to reload and recycle and add to the position. But
Yeah,
yeah,
during Globex, I've been trading micros, 5, 6, 8 micros, um, and keeping my stops. I mean, as much as 30 points, and I'm still doing okay. So it's crazy, but I would never put 30-point stop on a full size ES 1 or 2 contracts. That's
okay.
just nuts.
Yeah, that'd be risking way too much. But so you guys see, when it comes to the tracking, what Jay is trying to show us is when you're tracking these setups, you not only are getting conviction in the best trailing method or the best, entries, things along those lines, or where it's happening. The stats will tell you that. But also, what made me realize how important stats are is the ability to adjust when the setups slow down and stop working. They say like traders they get really good at a certain setup and it's working for a period of time in that market, but then the market changes like it's been lately, and your old setup might not be working as well. For instance, for me, my under overs, they're not working really at all right now. So,
So
tracking that lets you adjust faster, and that's the importance of tracking.
yeah, like I said, I mean the over unders are a little bit more rare. But guys, if you see something, so this is the over under track. Uh, you see that most of this. I know this is just like I don't know how many entries, not very many, right? You can see, but this is a week's worth of over unders. That's a lot, okay? It's like every single day there's one happening, at least.
Wow.
Um, one, two, yeah, there's a week. And so how many days in a week? Five, right? Okay.
Mhm.
Um,
Is this week topic?
last week I think
Last week.
I'm still gonna compile.
So these were all the good over unders that happened last week.
Yeah, I think this might be 2 weeks worth. I'm not.
Okay.
Yeah, yeah, probably 2 weeks worth.
Yeah, I know AMD set up like Thursday and Friday. That's what I like about it.
Yeah, AMD has an attitude. It's just gonna go, bob and fell first minute out of the gate, pretty much almost like multiple days in for a period of time, and then it's gonna stop doing it and just chop, right?
Yeah. Real,
Um,
real
yeah,
quick, let me show everyone AMD real fast, and then you can keep going.
yeah,
But
that's okay.
I just wanted to show you guys. This is why I like AMD, is because one, once you get comfortable trading it, you kind of get really used to it. But here's on the 1 minute chart. This thing sets up, you can calculate your criteria. It's opening up below the J lines. It didn't really pop up. It did pop into the J lines here ever so slightly, but if you were shorting this thing, it made a nice leg down. If you were at a high enough average cost, it rejects VWAP and the 9 here. And so this would have been a pretty good move at the open, actually. And then same thing the previous day as well. So 2 days in a row, AMD made a over under. Like this over under here where it just kind of goes up and then rolls over, or even here where it pops into the J lines and kind of rejects um, around this area. These are some of the best setups of the day, and that's why I like AMD. You get comfortable with trading it on the price action, and it does a setup day after day. When everyone's watching DocuSign or something else, AMD just does these kind of easy setups. So, and it's the same thing with the under overs where it's going up and we're in the, bullish market. It'll do an under over sometimes like 4 or 5 days in a week.
Question, Eric.
Yeah.
For those trend lines though, for the AMD, I wanted to, if you could go back to the other day
Okay.
for AMD. I was wondering, like, in regards to the trend line, right, that you were talking about. This isn't a trend line to you, or would it be just a consolidation and a breakdown?
Right here.
Yeah.
Um. Well, I mean, it is kind of a consolidation, but then I started to draw a trend line to see, where is like this is creating a supply demand zone. That's kind of what some of the traders have been talking about recently.
Yeah,
Where
but
it's, mhm.
in regards to like, I can see that happening where we're in the other one. I forgot the other ticker's name. You showed a little bit more of when you were
Okay.
talking about flags.
Docu.
Yellow's not red enough. Let me change it to the Daku, right?
Mm-hmm.
When it was going down. Oh my gosh, sorry. Right, and then there's this little consolidation pop, and then when it went down, you shorted it here,
Yeah.
and there's also a bear flag, right?
Yeah.
I'm gonna say that's like a bigger version of that because there was a pop
Yeah.
here too.
Yeah.
But in regards to a trend line, right? Um, do you if it's some as messy as this, right? If it's consolidating, do you switch to a higher time frame? Like does a higher time frame trend line matter more to you in regards to a position trade rather than just something like a pop right here, like you
Well,
did?
this is not the perfect kind of flag break like this that works so well. It's kind of like this bigger consolidation. It's a little bit messy, which is kind of what you're pointing out. You can try to short the pop here that Jay would recommend to do, because if you try to take the break, like the 1 minute low, often in this market it's squeezing right back up and shaking people out. So I mean, if you were using a 5 minute time frame, here's the 5 minute low happening, you could have shorted it here and then you still would have got a decent move. But if you shorted it here, where do you put your stop loss? All the way up here. And this is not really a good RR. If your stop loss is all the way up here and you're going down here, you're barely getting to 2R. So that's where if you short the pops, kind of like near this area, let's say you're shorting it near VWAP. Is it why? Every time this thing pops up, it rejects VWAP. It pops up, it looks like it's going through VWAP. It's got some elevated value. And then what do? They roll it back over on lower volume.
Uh, yeah, so maybe an idea is if you draw like this or that or whatever, and it's too wide or something like that, maybe then the next best thing is to look for the pop instead of the flag breakdown or
Yeah.
break out. So there you see the little consolidation, and this is the pop right there, and then here's a little bit of a break and pop above that, and then this one works a little bit more easily, and it's also so you could probably take it over there.
Yeah.
But I also have in confluence with maybe like VWAP or JLAX, and also if it has a volume divergence or
Exactly.
convection trade, something like that. Do you think
Yeah,
that's a good?
exactly. What I've been paying attention to a lot lately is how VWAP is performing, because we're in this like indecisive market. We don't know if we should go up or down or what the value of this stock is today. That's where the volume weighted average price VWAP is really important. And you can see here we pop into VWAP. Does the price want to go above VWAP? No, not right now. Does it get above VWAP for 1 to 2 minutes? Barely, and then it rolls back over. So that starts to signal to me because I'll draw a trend line like this, and then I see it break, and then I see it curl back up. So then what I do is I adjust my trend line, and I then draw. I first drew this one, and then it breaks down, and then it curls right back up. So then I draw with that new low, which is this one here, like that.
But you're using the wick and then you're using the body on that. That's
And
okay for you?
yeah, I'm
But
using the wick in the body here. You're saying?
yeah, because I mean, on that, you're using the start of it is the wick, but then right here you're just ignoring that wick and then using the body.
Yeah, it depends on how I feel. Like I guess there's not a perfect way to do it. Some people use like the body. Also, usually I do try to use the wick. So maybe I would have drawn it like this.
Yeah, I try to do like if it's a wick, use all wicks. If it's a body, I'll use all bodies.
Yeah, unless it's like some kind of uh, messy. Unless you're just trying to get a scope of where you're going. But yeah, usually I do use the wicks. I'll tell you, even if it's like this, I will actually draw it from here to here like that because that was
Yeah,
like the previous relative low. But what Jay is saying also was shorting the pops and using a feeler size is you're not getting in up here at max size. You got this like wider stop. So if this thing wants to run up for a minute or two, you can still maybe hold it for the J line rejection that might happen. So if
hmm
you start with a feeler size around here near these tops, and near you see this volume shelf right here.
Hmm.
If you're doing a feeler size here, you can always add to the position here or here when you make your first touch of the J line or of the 9 moving average. What I'm always paying attention to after we get a trend break and we're getting strong and you got the 9, like Top Tick is saying, a momentum indicator. We've left the 9 and now we've got a distance between the candlestick and the 9. It's really important to see what the reaction is at the first touch of the 9.
okay.
So
So would
this
you?
is not the
So
best
like,
example, but
yeah, that one's pretty messy. But I was also looking at what's his name, Switterman. He
Oh
made that
yeah,
AGR trade crazy hairstyle. Um,
the way
like
he draws trend lines is just slicing. You gotta ask him how he draws it, because like you normally draw different versions of the J line depending on how
yeah,
the market would move, but he seems to just like present the charts, and it's just like it's
yeah,
perfection,
he seems to find
the
the
best.
perfect
Yeah,
trend
yeah,
line.
yeah, yeah.
I'm like, what
But
the freak? I like if
yeah,
you saw my charts in real life, I think you could see it in the
no, no, no.
room.
I saw some of your charts, and
Yeah,
you're
it's
you're,
messy.
you're like Batu side, man. You're like slash the charts.
Yeah, bro.
It's
You can't even see the daily. It's all white because of the white lines.
yeah.
But
Uh,
in regards to like the trend lines, though, maybe the three types of entries I could see is like one, the clean bear flag, bull flag, through the 9. You take the break, and then two, if it's not clean, if the bear bull flag is not clean, and it does like a micro consolidation or something like that, you take the pop. And then Swinnerman, I saw in his trade, he would also take the curls downside or upside, upside for that one stock, the curl breakouts or breakdowns. So something like that, you would buy it like that.
okay.
So would you say those are the three types of entries?
Yeah,
Uh,
definitely. Definitely, definitely. And then sometimes when it's like ugly like this and going sideways, I'll look at the 5. And then when I look at the 5, we never got to the 1 minute J lines, but look at where we touched here. It's like on the 5 minute, quick little J line rejection. So if I miss this and the candle closes down here and then it pops up again, and now for the third time we're trying to get through VWAP and the 9 on the 5, maybe I'll short this pop as it starts to fade back down. I'll take a short here, and then I'll put my stop loss up here, and I can still get to 3R down here.
Yeah. So that one has that pop because of this break, and then that one also has a curl, and then you could take it on the break. I don't know. This is hindsight, so I
Yeah,
don't know.
but one thing what I'm watching for, Mark, is like this will make a fake low. It starts to go up, and then this candle makes a 5 minute high. And now I'm like, okay, maybe this thing's gonna start curling up for a bigger, move higher, right? But what does it do? What I pay attention to is this 5 minute candle here. This thing pops up, it traps all the buyers, and it starts to fade back down. And I pay attention to an entry right here because when this thing is now, it was supposed to make a 5 minute high and hold, right? And then start to move up or get close to the J lines and then roll over. But this is now making a trap here. So I'm paying very close attention as soon as it does this trap. Because this was a pretty good move up and then they faded it back down. So this is where an entry is. This new candle pops up into it and it makes the 5 minute low. That's like an entry down here,
Hmm.
but it's a little kind of late.
Yeah, yeah.
So
The pops make sense because those are traps. Like
that's a
if you
trap.
see,
Yeah.
yeah, if you see those pops and they break this like high over here,
Hmm.
they make it look strong for a few seconds or a minute or two, and then boom, they put it right back under. That's the
Exactly.
long trap, and so if you have the long trap, you have more selling pressure because yeah,
And
I get
so
that. I get that.
when I see that, that's a really important signal for me because then if I see it once, then it can happen again. And that's what Jay always says: is if you see some sort of trap or stuff happening one time on a stock, they're going to use that technique again. It's just the market maker doing their job. And if you're paying attention to how they're doing their job, you can spot it again. So here we go. It curls back up. Now we're going back to the J lines. What happens right here at the J lines again? Pops up. It's like looking like it's going to get strong. We've got elevated volume right here. And then what happens? The short sellers step in. They say, nope, you're not getting above the J lines right now. And then they make this a trap. So you could either take it here when it starts to fade back down, and now it's instead of it being a 5 minute high, it's trapping. You could short it literally right there, and then your stop loss up here, and you'd have to hold on for 10 minutes, but it would have worked. You see how um, if you would have shorted it here for the 5 minute low, if you didn't have your stop loss, if you would have shorted it right here and you didn't have your stop loss correct, this thing would have been drawing you down near your stop loss the whole time. Which I don't like that because which sometimes you got to be able to do that. But let's say you short it right here because you're like, oh, it's making a 5 minute low. This is the J line rejection. I'm gonna risk $500 on this trade. If you don't, if you have your stop loss here at the J lines, this thing's gonna come back up and ring you. You know,
Let's do it on the one real quick.
on the one, it would
Yeah.
be right. And that's why I was asking Top Tick earlier, where are you seeing the most J line rejections? And that's where it's important to track that because sometimes at 10:30, it's at 11. Um, and this is what he was kind of saying earlier. If you see it drop right out of the gate quickly, you see it pull back up towards 10:30 ish.
Yeah,
Right, Top Tick?
yeah,
And so this is exactly what he just said earlier. And now we're looking at a stock and it's literally doing that.
Mm.
yeah,
Okay, this thing didn't, it made a steep drop at the open, so at 10:30 it curls back up.
yeah.
Whereas if it made the chop and then the J line rejection and then chop down and then J line rejection, the good J line rejection would have been later in the day potentially.
Also, to add to that, what I've been seeing is that like sometimes around mid morning, you're gonna see a J line rejection, but then it's gonna fail. It's gonna do what it's doing like here at AMD. It's gonna reset. The 5 minute is gonna turn back down. You're gonna wait for a flag to happen, and then it's gonna continue for a bigger move. I've at least seen it maybe 3 times the past week.
Mm-hmm.
These are the weakest stocks. I mean, in because I just trade a basket and like whichever has the percent change weakest, I just trade it. But yeah, this is a common thing that they're doing now.
But you guys can see here, is this a J line rejection up here? No, we're like above the J lines. So this is like a really confusing thing to look at if you only are paying attention to the 1 minute. But it does reject this pink line, which is like the 200. So you could have said, oh, this is a like on a 200 MA rejection. But if you're looking at for the J lines, you see how it's sloping down. It's red, and then it gets above it, so it's green, and then it goes back to red. This is kind of confusing to take a J line rejection, but that's why instead of just using a 1 minute chart, you have to use the 5 minute or a 10 minute, depending on what time frame you're looking at. Because on the 5 minute, I know we did a J line rejection here once already. It didn't do it here because we didn't get up to it. It did it here. So on the 5 minute here at the open, we were respecting the J lines. So when we get back to it here, are we going to respect the J lines again? That's the question. And so that's what you're watching for.
That's a pop and fail for you.
Um,
Mm,
Here you mean?
No, this one.
No, that's a J line rejection for me.
It's just a J line rejection.
Yeah, because
Okay, I was gonna
pop
say.
and fail would need to be for me early here around here in the day.
Okay, that's not even following the trend anymore. So this is like a different scenario, anyways.
So, Eric, can I comment something here? I mean, yes, some clues like no. I mean, as I was previously also telling, see, we have to notice on this highs exactly the same highs over here. See, if it is crossing something above, then that is the and there is a quick trend change because I mean here you can see it is closed above here, and here also it is trying to create higher highs. So that is a maybe that is a trap or a short term trend change. So and exactly over here, uh, here if you look on this one, as you said, Eric, that's exactly right. So once this below is breached, once the new candle started popping below this line, then you can see a quick reversal is going to happen over here. If I'm in a trade starting from here, this position, I will be ready to go out here because I can see that it is creating a new higher highs exactly over here, these levels. So it is not holding this lower. See, it is trying to break these highs. So I will be exactly out in this range and I will just wait for the next setup. So
Yep.
here, perfect setup over here. This is what I had sometimes Jay was saying ABC pattern, right? So
Yeah.
1, 2, 3 kind of see exactly over here. Here is the higher highs, but the stock is not able to maintain that levels. It is trying to get shorter over here. So here it is an opportunity, or here it is an opportunity for the new trade with a stop loss in this area. So there is an amazing trade we are going to get.
Yeah.
hmm
Mm-hmm. Right.
Also, if the way I look at it, this JLR is basically reset, 5 minute turn, and curl down. So right at the break of the 5 minute candle right here, you see this is going on. See on the 1 minute, so you see like a curl down. Actually, you might be saying, "Oh, but you're trading it right at the J line. This is fine. It's a momentum trade." So you can start maybe with a lower size position and just expect that flags are going to happen,
Yeah,
and just add it on the flags if you'd like, and
Yeah.
build your position that way. So even if it turns quickly, your initial starter is not really full size. It could be like a half or maybe even less, and then you just build your position, looking for flags, build, add, looking for flags, build, add, looking for flags, build, add, and then just take it down.
yeah, exactly. So one more thing is, if you imagine the stock is trading right now, right now here in this area, it is not. This is not happen. Okay, just imagine the stock is trading out here, and if you see a candle closing below this range, then that is a clue like no stock has chances to go below, but nothing is happening yet here. It is always trying to go upside, upside, upside. But
Mm-hmm.
if you get a chance like now something is closing below this range, then you can start shorting again over this range.
Yeah.
Remen, I have a question for you. So when you trade like a specific setup, JLR, JLC, over unders, how many tries do you give the setup before you let go?
how many tries means on in the same trade or in different trades?
Same trade.
Same trade, yeah. So uh, I sometimes normally like I mean, if you look on this one, I
Hmm.
may try to trade in this range when I see something is going below. But now I'm a human, as we are all humans. It won't have some. You may see a quick weak downside, and it may go reverse. So what I do is I may be in an entry right over here and just wait. Maybe I'll be having a starter over here, half size over here, and I'm
Hmm.
ready to stop out in just above this range. And
Hmm.
as long as it is not going that range, I'm in that trade. And once I see that it is coming on my expected move, I may go into full size. See, I'm always trading with options, not with the stocks. So
Hmm. Yeah.
yeah, so I will be in lower size. So normally what I do is I divide my total account into four four trade calculations. So I will take my first trade range over here, and once I see a good move, I will be prepared to go out. So if I see something is go above this range, I be immediately out because no, I mean I will not get anything on my options because options price no, I
Yeah.
mean
Yeah.
yeah, it will go quickly. So I
Meltdown. Yeah.
yeah, yeah. So what normally I started, I mean I tried different styles, and I mean this week what I was doing was no, I mean I'm taking this move, and when I see a rejection from this area, I will take my partials over here, and partials means 50, normally 30 percentage or 50 percentage out here,
Okay.
and I set it back to my stop loss price, I mean my buy price, uh,
Entry price. Yeah.
entry price.
Premium.
So I have noticed sometimes my stop loss is not triggering. I don't know, maybe the price is just jumping over. I mean, the option
Yeah.
price,
Options. You
yeah,
know. Yeah.
jump, yeah, jumping over. I don't know. It happened to me a couple of times, and I had to exit manually. And again, I just wait for sometimes. I mean, I still have that FOMO situation, and see on this move and this rejection, I try to enter over here, but no, I mean, then it quickly goes back, and I stop out.
That's I think that's what a lot of
Yeah,
us do,
yeah.
right?
With options, it's even more crazy because like you get that pullback that ensued right after, and you're gonna be like down way more than you were on the underlying, right? Like you know, you're gonna that's like a crazy meltdown. Like you look at what happened after you know when you posted your entry.
Yeah, yeah. Because
Um,
yesterday, I clearly remember I was in a situation with Amazon. Amazon was, I mean, I got a nice entry somewhere around. I mean, I can just give an example over AMD, like Amazon. I got a somewhat nice entry over in this area, and
yeah.
I took my purchase around this area, and then quickly see Amazon's spread is crazy. It's, I mean,
Yeah.
just $1 move spread on option is, I mean, it's very crazy. So
Hmm.
as soon as it came over here, I mean, I went back into big negative numbers. So what I did is I just added one more, and I just waited for my stocks movement favoring to my position. So I just waited a little bit, and I saw one rejection over here, something like that, and I have added a little bit more, and I immediately started taking partials like this down there. So that turned into a good green to me. But
Nice.
yeah, but no, I mean, see, actually, that was a wrong entry I did here. I bought here, and I bought here. So I shouldn't buy these two things. I should buy only here because if that was AMD, I had nothing to worry. If in that case it was Amazon and expiring yesterday itself,
Oh,
if it makes a move the next
oh,
day, oh
expiry day.
yeah.
Okay.
So that is still something I'm trying to improve. Yeah. So yeah, maybe hope we can improve. So yeah, I hope we can improve that. I can improve that. And I didn't see the Tesla move yesterday because I was heavily focusing on Amazon.
Mm.
Uh,
Yeah.
I was somewhat I was anticipating a big drop on Amazon yesterday because it had a good run, though it had very favoring news couple of days ago for the split. But no, I mean yesterday's volume and everything, I was expecting Amazon has some more room to go down. It was my anticipation was right, but that happened in the afternoon. And in the pre-noon session, that was a little kind of choppy.
Right.
Yeah,
Okay.
Tesla was the best day for yesterday, but
So, Remen, yeah, I see you doing JLR, JLC on option, right? Wouldn't it save you on the meltdown if you actually traded the pop right on, like the trap, if you try to enter your contracts on a trap instead of, the momentum move?
traps like this, you're saying?
Yeah, like this one right here. Say for example, let's just say that's, a JLR. Okay, you saw the trap, you enter your position right at the trap.
Mm-hmm.
Because like obviously when options go up, the premium spikes, right?
Mm-hmm.
So if you enter when the premium is high, you're gonna get a high price and maybe protect you when when you get a pullback, and therefore you get a little bit of meltdown on your options premiums.
Yes, yes, exactly. On the
Okay.
you will get you will get a very good meltdown on Amazon. So in such cases, I will be entering low size. If I go with high size, it will kill my position. So I will just go
Yeah.
on low size on here, and I will just most probably I was just started looking on 5 minutes also recently. So
Wow.
what I will do is I will not probably take a trade on this area. I will wait to see it is rejecting below to this green candle. So maybe I will be starting taking a position over here.
Yeah, that's still good.
Yeah,
Where would you put the stop loss though? All the way
stop
up.
loss. No, I mean most probably in this case, this stop loss wouldn't work. So most probably I will set a dollar amount stop loss, like I mean 150 or $200 stop loss in my mind. And if I see that rejection, of course I will try to get out there. So this stop loss will never work.
Up
Mm.
here, yeah. But you could add to it and tighten it, you know, as the trade starts working.
Yeah, yeah. So if I'm trading on Amazon options, so I will not wait for this pop to happen. I will definitely take my partial. If I have only one in my bag, I will definitely take out on this area, because I mean this one again, even though
Yeah, even if it popped up like that on the underlying, it's probably way more on the options.
yeah. So and here, if I didn't take my profit over here, maybe it will give me a tendency to re-enter here, but this rejection will kill me again. So that happens to me many times. So, but it saved me many times as well. I don't know. There is a good strategy to go adding gain over here on
I see. I see.
option.
It is
Yeah,
hard, man.
yeah.
It's been
But
my problem as
as,
well with it.
yeah, as long as it didn't cross about this was rejected out here. See, we are seeing this range, right? So it just popped out in this range. So we know. I mean, we can see some areas. We have to see something. If it is rejecting, I mean, if it is going above this range, I will be out there.
Mm.
But if it is holding, if I have entered somewhere over here, and if I'm holding it, okay, I will see this one just popped above on this range, but it closed below. So that gives me a good indication, like maybe it has further chance to go down.
Okay.
So I was never be able to take the full run. So I mean, yeah, I'm sure. I mean,
Yeah.
yeah,
Yeah. I mean, unless your starter is like
yeah,
200 contracts, then you're okay.
correct, correct. Yeah, so 5 minutes. I mean, Eric was 100% right. Looking on the 5 minutes also very helpful. I was trying to trade with final candle recently, but I mean, I just switching my eyes between 5 minutes and 1 minutes and the bookmap as well. So I always look for any kind of no any kind of heat map or liquidity coming in. I just wait for that because Amazon just hundred stock is enough for it to bounce or reject, because that's a big thing, right? So if I see a liquidity out here, that will be maybe 100 stocks or 200 orders sitting out here. We may think, it's just $100, it may break. No, 100 orders or 200 orders is enough for Amazon.
Yeah, that's
Yeah,
plenty.
that's true.
Yeah.
Yeah.
So, what Rem's all saying, guys. to keep in mind is that the 5 minute can help you not get chopped up in this
Yeah,
because
exactly.
we're not as precise as Jay. Maybe
Mhm.
in 20 more years, but trying to spot those entries and then not get shaken out. And the thing about Jay's entry is he'll do some precise entry, and then if it does keep chopping, it's like he said the other day. He's up 50 grand on the week. So if he takes an entry on a feeler size and he wants to add to the trade as it goes against him, does he care if he loses two, three, 4, or 5 grand?
Yeah, of course,
No. But
of
for
course.
us, we're like, well, I'm barely up on the week. I'm up a little bit on the week. And then I'm taking this trade. Now I'm going to add it to a losing trade. And I'm not a professional at adding to losing trades. So that's where he's been saying lately, start with the feeler size. And that's where I've been pushing lately, watching the 5 minute more because when I take a when I trade off the 5 minute, I inherently take a wider stop.
Yeah, you're right, 100%. So, I mean, I still remember in the one of the trade I was early this week, I was up about something 600 or $800. Okay, then I thought I finished that trade and I thought to take another entry. I don't remember which was that because but I just thought to take another entry, and my mindset was okay. I made fine 600 or 800. I can just risk 200. Let me take this one. See, I mean that I was planning to take except $200, but I mean that killed almost 400 or $500 from my account.
Yeah,
So
and you got to be careful there because sometimes emotion kicks in, and then you're
yeah,
saying, okay, I only wanted to lose 100 or 200. I was up 600. Now I lost 400. I got to make it back. That's
yeah,
what your brain starts telling you. I got to make it back.
okay. Yeah. I mean,
When
if I mean, the best thing is if you're at 500 or 800 and you decided to stop, just stop and go out for a walk or stairs. Just come back later and wait for another trade. Just to clean up your mindset. That is important.
Yep, exactly. Because too often when we're up on the day, we want to go make it back, and that's where that goes back to my rule. Remember,
Yeah.
if I gave back 50% of the profit I made on the day, if I was up 600, I gave back 400. Now I gave back more than 50%. I was only allowed to give back 300, right? Then the rule says stop. No more trades. Even though you want to, even though it's the best setup ever, even though you think you can do it, no more trades. Because
Yeah.
emotion for me can take over, and then quickly I would just say, oh, screw it. Let's just risk it all to get back. And then now I turn a good day into a red day. And that's why I've told you guys all before many times. Go
Mm.
count how many times have you had a good green day and you let it turn into a red day because
Mm.
you didn't stop.
Exactly. If you're in winning side, you feel yourself as a champion. Yeah, I'm very good at this. So there is no true. Just exactly. Just take your profit. Just walk down. You will see the best setup or best trade later after some time. So just wait for that. Just switch on to other stocks. Don't focus on only one single stock. Maybe other stocks are giving very nice opportunity because I'm saying it from my experience. Yesterday I was keep on concentrating on uh, Amazon, and there were beautiful scenarios were happening with the Tesla, AMD,
Yeah.
Nvidia, Apple, but my focus was only on Amazon.
Yeah,
Amazon.
sometimes you guys, if you get too focused on one stock, it's hard to kind of change your focus on it to go to a different stock. Like let's say you're trading Amazon or AMD, whatever you're trading, or a small cap, and maybe you're losing a little bit, and now you're deciding you want to fight the stock a little bit. You want to try again. You think it's happening now. And the reality is if you were to just go to a different stock and change your focus, the setups would have been a lot easier. And kind of like how Mark was saying, oh, well, how do you draw that, trend line and how do you trade the AMD? Well, AMD was a little bit messy, but then if we go here and we look at Tesla, look at all these like little scalps right off the 9MA, you
Yeah,
know? Like there's like tons of entries and
Tons of entries, and
yeah,
AMD and Tesla and Apple,
yeah,
most of the time, the charts, you look at the charts, all put them side by side, and they all look like they're doing the very same thing.
Yep.
So
There's
then,
so much money to make
yeah,
focusing on just those few stocks all day long, like just scalping. It's amazing.
see, one interesting thing was, I mean, I had, I was too busy last 2 weeks in my regular job. So I was in meetings and I heard Jay's calling. I mean, I ended up out of my meeting and I switched right to Jay's commentary and I heard Jay calling Tesla, giving a beautiful setup, short setup. I heard that. I heard that and I saw that setup, but I was already into Amazon and I was just like, I mean, kind of fighting with Amazon. I was on profit, but no, I mean, I was trying to save my account on Amazon. So I didn't take that Tesla. I don't know if I was taking that Tesla, what is going to happen. I wouldn't be able to focus much on Amazon. Maybe I did the right decision. I don't know. I don't know, but if I was entering on a Tesla, it could have been a good one, or
Wow.
good, yeah. But the other side, maybe Amazon will kill me in the other side.
Well, as long as the thing is, as long as you had a proper trade on Amazon, because that was when your focus was, like, you know what I mean? It's different when you're trying to fight and it's all that you see is the fight. And
Right.
then all of a sudden there's like A pluses forming on your side monitor, your side watches are all forming A plus trades and you're here stuck, like, watching maybe a C grade trade and you're trying to go ahead and force it. That's horrible because, like, the
Yeah,
thing is, when you're in a position, it takes out your focus from everything else.
definitely.
And you don't have the clarity because you're committed to something, right?
Yeah,
Whereas if you're not, you're the judge and the entire market is basically the beauty pageant.
yeah,
That's where it's important when you're on a stock, whether it's a small cap, big cap, whatever. It's important to say, okay, the setup that I took, was it a good setup? Yes or no? And
yes.
sometimes it was a good setup and you still lost, and then you're like kind of like, oh man, I lost today. I'm upset. But it was actually a good setup. And it's just that that stock that day was not trading good.
Yep.
So often I used to be kind of hard on myself, saying, "Oh, I lost. I'm upset. And I'm not feeling it. What's going on?" And it was actually a great setup. It just the stock didn't do it. And then I go look at some other things, and I'm like, "Well, if I was trading Nvidia or MU or something else, Apple, if I would have took that exact same setup, it would have worked."
Like,
So
yeah,
it's important to pay attention to that, you guys, because there's times when a good setup happens and you took it and you lost, and you shouldn't be hard on yourself. It's when you are fighting it and saying, oh, no, no, I'm not even going to break my focus. I'm going to trade every 1 minute candle, you know?
Mhm.
So it's important to pay attention to that kind of stuff.
Eric, um, do we still have time to go over cause like I sent
Yeah, sure.
a picture. Thank you. Um, is it alright if I go on a bit of a monologue first?
Yeah, let me just ask everyone, was before we move on to some small caps here, was there any final questions about
One
anything?
more. Me,
Okay,
real quick. Sorry. This is just a quick so Christian can speak. Can you zoom in like whoops, where's my speed? Like right around there. Zoom in more. So I can point it out more easily. Okay. Excuse me. So, okay. The 9 EMA breaks. What I was assuming like 9 EMA breaks, the clean one would be like white, white, and then boom like this, and it does that.
Mhm.
But then you see something like here, you do a 9 EMA break there, you do 9 EMA break there, but you see a little bit like of a small pullback, really micro pullback. Well, my arrows are not.
Mhm.
Wouldn't it be better to, because those like little micro pullbacks are an indication of like a potential pop, which it did here, to instead of taking that, um wow, why is my lines inaccurate, taking those breaks, thank you, instead you take that pop over there above that
Yeah.
little red arrow.
Mhm.
Isn't it better to do that if
Yeah.
it does something like that rather than it has those clean green candle, green candle, then boom, it breaks that, and then you take the nine?
Yeah.
Or is that what, like, what are you looking for when it starts um, heading up again, bouncing a little bit? Are you trying to look for a clean trend line, micro trend line break, or are you looking
Well,
for pop?
sometimes it depends on also the day and how I'm kind of feeling that day. Sometimes I need to just be patient and wait, and I'm indecisive. If I see this pop, I might be indecisive. Like, okay, this thing could easily just keep curling up, right? So I'm just not feeling it. I don't know yet if this is going to be a bigger pullback. The other days, if I'm feeling a little more risky, maybe I'll put in a feeler size right here, and then I'll take an entry as it's fading back down, and I'll just set my stop loss right at the top. And then as it consolidates and it starts rolling over here, maybe I'll load into it, and then you get a good trade from right here. This
So
little
there's
move,
really no like set rule. It's just what you feel like. Oh, do I risk?
I mean,
Do
yeah,
I feel like?
because it's trading is a lot about how you feel each day, and how you're
Well,
performing.
yeah, I'm trying to just make it like rule by rule, so it's systematic. Like whatever it does, it'll always do this. That's when I short or something like that.
Right
That's why I'm
now.
asking like
Mhm.
that. That's why I'm asking like, okay, do you? I'm trying to clarify to you what a a bear flag is or a bull flag is, so that there's a set rule.
I mean, for from a more beginner perspective, taking the break is good. But from you're a little bit more advanced. Look at pop right here, fake pop, drop. Another fake pop, and now it's even dropping. Maybe I'll put in a feeler here.
Mm,
Another pop up, rolls over, and then you're just having FOMO if you miss this huge drop, here. So, and this is what Jay is telling us: short the pops, because there's a lot of weakness in the market. And where do you short the pops? When you're below the J lines, when we're in a downtrend overall, when we're in a really weak position, that's where you short the pops. Not if we're trending up
mm,
and then you're shorting pops. It's a little dangerous there.
Yeah.
But here, below J lines, below the nine, and we saw that the nine was working here. So we want to give it a test run to see if the nine is working here.
okay. Then
And if you would have shorted this pop, and if you would have held it really well, and you have stats, let's say on the best trailing method,
mm,
let's say it's 1 minute candles, let's say it's a nine. They say that the best trailing method is really a hybrid style. So you would short the pop here, and you'd wait to partial until it makes a new 1 minute high. So you would take your first partial here, and then you would adjust to trailing with the nine until it closes above the nine. It didn't actually close. It closed
Yeah.
right at the nine, but it rolled right back over, so that doesn't count. And then now all of a sudden you're trailing, and where's your next partial? It's like here.
mm,
Exactly. So
So
Eric,
like with little size here, 30% partial here, 50% partial here. I mean, I don't know. That's an amazing trade
It's
here
like a
because
5 to 1.
more than that. Like if
Yeah.
you were really trading it like that, and here's your stop loss. Let's say you
hmm
risk $20 right here, because this is what I've been trying to show you guys before. You risk $20 on this trade. Okay, keep it simple for everybody. $20 here, you're gonna make like $200 on this whole trade.
yeah.
You know,
Eric,
I would think
yeah,
maybe 100.
yeah. One thing I noticed is, no, I mean, that is a great example, Eric. So see, if you look on that chart, it never closed above the 9 EMA. That is a great example. So see, where you're seeing it is closed above the 9 EMA. That is barely somewhere around 10, 12, or 10, 13, just one candle. But that is also, it is showing a great weakness. So you can easily trail with 9 EMA.
And Remen, that's how you do it, right? Do you trade the nine on the one or on the five?
Uh, I use 9 and 13 EMA. That is the 5 minute J lines.
Mm.
Yeah, I use both. So and maybe sometimes I use for the crossover 9 EMA, 13 EMA crossover, or 920 crossover happening.
Mm. Hmm.
So that is a good signal. Crossover is a good signal for the entry and exits.
But how would you trail this if you got an entry, let's say here?
see, for this, if I had taken a trade over there, then I can easily trail that, because I mean it is not giving any indication to go back up, because it is perfectly going along with the NEMA, right? So I maybe, as you said, I in this extension here, in this extension, I may take some partials and I just wait, because it is overextended with the 20 EMA and 9 EMA. So
Okay.
of course, yeah, stock will have a tendency to go back. I will be just cautious waiting, and I don't think I will take an entry over here because stock has already traveled a lot. I will just wait.
Mm-hmm. Mm-hmm.
Yeah, because
And
yeah, this is for me. If I take an entry over here, for me myself, I will call as it is a FOMO entry for me, because I did
yeah.
many times and it is went against it.
Okay,
But
so
if you take this partial here in the extension, Ramen,
Mhm.
would you take another partial when it curls up past the 9 on the 1 minute, or would you actually wait for like here the 9 on the 5?
Maybe I will take another partial over here. So because
Where here?
when it closes above here, I will take
Okay.
another partial and I just wait.
Because it
Maybe,
closes above the nine.
yeah, maybe, yeah. So if I am starting from the beginning over here, if I'm in the trade from the beginning over here, my first partial will be somewhere around here or somewhere around here, and definitely I will take reshort here, and I will take another partial over here, and I will try to reshort over here, and
Yeah.
then there is no more entry for me, because now it is stock is already overextended, so another entry will make me scared.
Yeah. But let's say you're adding here, would you still partial when it makes a new 1 minute high here, or would you wait till the extension down here, or both?
Yeah, definitely I will take a partial over here.
Okay, so you would partial here, then you would let it roll over, then you start to see elevated volume and extension. So you're like, okay, let me partial here just
Yeah,
in case this is the end of the move and it wants to reverse.
yeah, yeah,
And then it consolidates, and then now it's getting above the 9, so maybe a little bit more here. And then after that, you kind of can follow just
yeah,
the 9 on the 5 minute.
exactly.
So you guys see how there isn't just like one perfect trailing method for big caps. It's kind of this hybrid combination of knowing all the trailing methods, so that way you can
yeah,
know the system.
using the one that's the market is currently showing you exactly, and then identifying the correct one as the trade progresses to different phases, and then you gauge your exit that way.
Yeah,
So, final note, if you guys want to keep statistics, I would just say, if you guys take a screenshot of your charts every single day, then maybe in a 2 week period to go ahead and just review it and just list down the common things that you see personally that you want to track, because that's like the market is showing you its cards, right? And you want to track the frequency of when it happens, and maybe the frequency if it works or not. That's up to you. But if you know that the market has a certain frequency of 30% or 60% showing you a certain type of price action in a day, you know exactly what you're looking for, because you've taken a look at the pictures, you track them, and you categorize them, and so maybe to complement your setups. And that way, when it's not like you're blindsided every single time a certain move would happen. You're not. You're just like waiting because oh, it might do this today because it did this. Like what I said. If it goes down straight away at the open, you're gonna get the JLR between 10:30, 10:45, 11. If it traps or ranges or does something, it's choppy at the open, breaks out of the range, you're gonna get your JLR much later in the day. Like maybe, just an observation. So again, it's one thing to look at the charts, it's another thing to track it so that the frequency or what the current market is looking like. Okay,
yeah,
that's it.
yeah. So always respect the stocks. You will get another entry sometime later, but respect the stocks. That is the best thing. So I was not respecting, and I started respecting it. So I think that is giving me some edge now.
Mhm.
So Sometimes I was just okay. Let me wait. Maybe it will give a nice move towards my favor. So I was expecting something like so. No, don't expect. Don't think. Don't think. Just put your stop. If it is stopped out, no worries. You'll get another entry. Nothing to worry. So yeah, that is the main thing. And I mean, and by looking on the chart or everything, I mean, don't think like it is coming to my favor. No, we don't know if it is coming good. Just think, no, I mean, it can go either way. There's nothing to think there.
Yeah, so guys, I'm glad we were discussing and talking about this because this trailing method it's something that I really need to improve on too. I understand it, but when I'm in the trade, I don't do it as well. You know, I might just be taking a partial here because of maybe I glance at my profit and I'm like, oh, I better just take some off in case it just makes a quick reverse. And that's not really the right way to do it. You want to take what the market's giving you.
Yeah,
Don't think about your profit and just kind of what signals that's giving you a signal to sell or to buy, I guess, and cover in this example. You know, you go off those signals.
yeah. Jay was telling the same thing. I mean, many times. You take your partials and put your hard keys into your break even price. Who cares? Who cares? I don't care if it is hitting my break even. I don't care because I have already taken my partials, right? So
Yeah.
yeah, so
Exactly.
yeah.
And Jay will also say that 20% of his trades make up all the profits, right? He said that. Like
Mhm.
this week or last week, you know, you get like these crazy trades where you would have shorted Tesla here,
Mhm.
you would have took a 30% partial when it gave you a little signal, maybe it was crawling back up here, and
Mhm.
then you know what he does, he just holds and holds and holds and holds, and then when you finally are partial and all the way down here, you know, and Jay was risking, let's say on this quick opening trade, $1,000, took 30% off. Well, when you get down here, he made $7,000, and he's not
Yeah,
thinking, oh, I'm up 3,000, let me take off some more. No, he's waiting for the signal.
exactly, exactly.
I had some trades like that last week. It was really good.
That's great. Yeah, you said
Also, I just uploaded a candlestick pattern chart for anyone who's interested in looking at candle patterns. Uh, it's from Steve Nissen. I went through his
Oh
whole.
yeah, nice.
So,
Yeah.
so
He
that's
has a great book on it as well. I have the
Well, this is a poster that was given to me by Steve, which I had laminated and I have it on my wall.
Oh,
oh.
nice.
uh, maybe I will frame it today.
No,
So
no. I mean, there's. I do look at. I mean, it's pretty much impregnated in my brain now. Most of these patterns, but you know, trading is so fast these days. But it does help sometimes when things slow down. You can recognize a pattern, and you can just go with it. You know.
yeah, you can easily go. What I used to kind of do is you go on the 5 minute because it's slower, candle by candle, and you say, okay, well, what was the 5 minute showing me? And then you look for the signal here, and then you follow it a little further, and then what is it showing you? You know what I mean? On the
Mm,
1 minute, it's a little fast, but yeah,
I
most
mean,
power.
you gotta,
these
yeah,
patterns go back centuries. I mean, when the rice trading
In Japan, yeah.
in Japan, yeah, I mean, hundreds of years,
yeah,
and they're still valid today.
Especially on daily charts. I think FCX
Yes.
and the oil stocks did a evening star this week, and so you, right, gapped up below and then somehow went up in the morning and then sell off the oil in the afternoon. I think was it Wednesday that they did this. They did exactly that pattern on the daily evening star.
Yeah.
Yeah.
That poster is like 2 feet wide, but I mean, it's big. It's on
yeah.
my wall.
that's awesome.
So anybody tried with Rango chart?
Brancos?
Yeah.
Brancos, I think they're good for trends, but in
Okay.
chop, forget about it.
Okay. No, no. I mean, I was just, I mean, just reading something about that, so I didn't try anything with that. But one good thing I found with the Rango is, I mean, Rango will really help you to understand just for a quick look, and not in the chart, not for the chart. Normally, the ATR, average true range in a minute or 5 minutes, if you just enable the Rango and for the 5 minutes and just have a quick look, you can understand what is the average true range of a stock in 5 minutes, how many dollars it can move. That idea maybe help. I didn't try that. I was just thinking that.
Yeah, I mean, so basically what you're saying is that you're using a Renko chart to help you with visualize the ATR, where you can get the ATR information for like toss
Yeah,
on
yeah,
a 5 minute chart on a 14 day,
yeah,
a 14
yeah, yeah, yeah. 14,
Uh,
14 moving average. Yes.
right.
Remen, you're using DAS, right?
No, I am using this. So I just read about Rango and I was trying to understand about the Rango.
Well, there's a way. I'll have to ask one of the other mentoring students, JD. But what he does is he opens a new chart in DAS, and then he sets the chart only to ATR, and then he makes the chart really small in the corner like this, and
Okay.
then it shows you what the ATR is always of the stock.
Oh,
So you
okay.
can,
I didn't know that. I didn't know that. Yeah.
yeah, I'll get that for you later. But that's a great way to kind of adjust your stop, so that way
Yeah.
you know
Yeah.
the ATR.
Like Steve Pulsini, I mean, he's part of Bookmap as well as J Trader. They're the two premier, I guess, traders that are on every week, all week. But Steve uses 80% of ATR for his stops, and sometimes that can be quite big. So he'll have to adjust his size in order not to get stopped out. Um, I don't know, I'm not condoning that you go look at what he does, but he does use ATR and he does use a percentage of ATR for his stops.
Yeah, yeah. No,
I,
it's a great
I,
way to adjust the volatility.
right.
Good.
Okay, you guys, because I know we will be here all day. Let's move on a little bit, shall we? Gondola had a couple of charts we can review.
Oh, yeah, so like I said before, it might be a bit long, but I'm gonna try and make it short. So yeah, I said that I wanted to do a bit of a monologue, before anyone gave a little bit of advice. So on this day, I actually took a max loss, and it was a very sobering experience, and I think everyone can relate. But now I'm completely over it. Cause like now I don't mind. But I'm just gonna structure my story a little bit. Because if you know me, I'm actually not very good at being an orator. Uh, cause a lot of the times I lose myself in trying to speak, and it's kind of hard for me. But I'll try and structure it well. So like I said, it was kind of a there's a moral to this story, right? And there's a lot of lessons for me. So I think everyone is gonna be able to relate because it was very emotional for me. So just for the first thing, what happened was, um, I was in a very negative mindset on this day. There was a lot of pressure on me, because I think too much about the money, right? And I always think about the commissions, the locates, stuff like that. Like my life situation, because um, if it's okay for me to talk about it, because it's a bit personal, but um, basically I don't go to school. I dropped everything. Like I saved up money to trade, right? And so right now I don't work. I don't have any plan B. So like I only do this, and there's a lot of pressure on me, right? It's like there's a mountain on my shoulders, and I feel like it makes me very stressed. And a lot of people are like this, right? And even I, like like I live at home, right? I don't have to pay for too many things, but still, like my account and stuff, I'm technically at a deficit, right? Like even with Bookmap, and then you look at the commissions, all that. It makes you very, very emotional. And even other people, they have families. They're the sole providers for their family. Like they're the bread earner, right? And that puts a lot of pressure on me. And even if I, like, for example, if I wanted to trade big caps, I wouldn't even be able to, because trade zero, because I was international before, they want to swap me to to Canada, and so now I get less, um my bad, what was it, less leverage. Before it was 6 times, now it's 3. But the main thing was that there's so much pressure on me, and that made me think about the money too much, and that and that made me very, very emotional, right? So during this trade, like, looking back on my mistakes, it was completely stupid. Like, now I know what I did wrong. I was basically really, like, my mind was too focused on trying to do a pop and fail, and like I tunnel visioned and forgot that this was on SSR, and like the volume was huge, because this spiked up really, really fast, and I just started to focus so hard on like the level 2, that, like, trying to do the pop and fail, that I forgot that it was so strong. And then I took a 2-hour loss, because it basically like squeezed me. So like I tried to stop out as fast as I could, right? And and I just took a 2-hour loss, and this made me like so emotional, because like I keep counting the money, like the commissions, because everyone complains about the commissions, right? Like, it's it's just like it's just a part of it. And like at the end of each day, I look at all the gains, because I was grinding up, like, grinding up, like I was green. But then at the end of the day, I looked at the commissions. I was like, from like $30 I get like 15, from like, so like it took half of my like with the locates and everything, right? And so then I just started, like, I became very emotional, because I wanted to make it back. um and then on the second trade, but we don't have to pull it up, but on the second trade, i I took a worse setup, because I wanted to make it back. So I took even more locates that were pretty expensive, to try and make it back, because I didn't want to lose. um and and the thing about this is, the moral of this story, like honestly, the chart doesn't even matter. Like, this trade doesn't even matter. The moral of the story was more that, um for me, you need to have like a support group, and that's what happened. Because I'm gonna be really real here. Because after this, th- like like after what happened, I actually started crying. Like I started crying, like, bitterly. Like, I was like sobbing and stuff, and I felt very embarrassed, because everyone has problems, right? Like, life is not easy, and I felt like these circumstances, I put them on myself, and that I don't deserve to cry, because life is hard. Like there's so much bad things in the world. Like, I shouldn't cry. And like, the archetype of the strong person, like you have to be strong. Like, if you look at Jay, um like, he has so much discipline. Like, when bad things happen to him, like like you have to take it. Like, Atlas, um from Greek mythology, it's like him holding up the world, right? And that's what I felt it was like. I was like so much pressure on my shoulders. I was trying to hold up the world. Because of that, I just became extra emotional, um because of that. And so I started revenge trading, and it spiraled into a max loss. um and with the commissions and stuff, like, and that, and you know that's just the negative side of it, like my thoughts. And but thankfully, um I'm in Mark's group, right? And Mugen is in it. They're very good to me there, because you need a support group. Like, when you're down, you need people with you to. That's why you have to reach out. That's why you have to use your mic. You need to like be with people that that understand what happens, because this happens to everyone. Like it's not only me. Like is these are like life lessons, and $100 like is nothing, right? Um, so what happened was Mugen. So he reached out to me. Because I'm very blessed to have met Mugen. I think he's a very very good person, and I think that like his type of thinking, like his spirituality, like not even the like like his kind of thinking is so good. It's so positive that you know, and he gave me advice, right? Um, like he calmed me down. Like everyone in the group, like they they calmed me down, right? Like now looking at these mistakes, they were very stupid. It was more of the emotional side, and instead of looking at the money, I need to look more at the psychological part and the system. Okay. Um. So so after calming down, from like crying and stuff, I realized what I had to do. Um. So the stuff that I was gonna do to fix this. So what I did was the problem with this trade was that I forgot about the volume. So now I have a rule where after each no for each trade, like I have a sort of checklist, and I have to see like before each trade I have to first train myself to look at the volume first. So before I take the trade, I need to look at the volume like real quick and then decide stuff like that. Like I have this checklist now, and basically I have a lot more things that I go over to um to to regulate my my emotions basically, right? But yeah, that's the end of my story.
Can I interrupt for a second?
Yes.
I've been where you're at. You seem to be a highly intelligent individual. I think you're putting way too much thought into what you're doing, and you
Thank you.
just got to
Yeah.
go with what you see and react to it. And
Mhm.
I think people who are of high intelligence and have to look for reasons why to do something or not to do something, you're gonna have to throw that out the door and just trade what you see.
Mhm.
And I'm sorry to say it, but I've been there. I did that
Yeah.
in the beginning as well. I beat myself up for stupid trades, but you learn after repetition and screen time what to look for and what not to look for.
Yes, definitely. The advice that Mugen gave me, he said that I was young, right, and that I just needed more screen time, more experience. Like the mindset that he has. He told me to read a book, The Power of Now. I'm reading it right now, and
Yeah,
it's really good.
yeah, it's a good book. I've
Yes,
read it.
and yeah, it's just like looking back on it at the time, like I was very emotional. Like my thoughts were very very negative because I was like cuz cuz I said I was like a retail sheep because I felt that um like cuz these small caps are like super like rigged, and like basically I beat myself up because I felt like it was kind of hopeless because it was me fighting against um like these manipulators, right? And I felt really
Oh, well, that's
hopeless.
why the market exists to take your money.
Yeah, for
So
sure.
you have to learn how to you have to learn to trade. You have to look at what the retail traders are doing, but not trade what they are doing. You have to trade the edges. You have to trade
Yes.
outside of
Yes.
everyone else.
Can I
Or
interject something here?
yeah,
Thank you guys. Firstly, what a lovely share. Um, it's brave, and
Thank
we
you.
we hear you, and you're seen and you're heard. And this might be a better place for the psychology room because there's a lot of support there. And also, there's a couple things here. So I notice on the chart, I'm stupid. Okay. So that's number one. And
Mm-hmm.
you can decide to change those words or not. It might not be the truth that you're stupid. And so it might not be true. You might be very intelligent. I don't know because I don't know you. So I
Mm-hmm.
can't say either way. But I what I what I'm looking at here is that you have told yourself, I am stupid, and so that's what is, and that is the truth for you. So that's number one. And then beating yourself up, we've all done that. Everyone's done that. And I think the crying hard is also um, a trigger. The market is a trigger for something else that's deeper that's going on. And I think that, and I would ask you to explore this in your own life, is that this coming to the market might be an opportunity to examine what you do across the board. In other words, Jay had that amazing speaker, a guest speaker. I forget his name. Stephen Goldstein, was it? Something like that.
Okay,
Yeah, a
fine.
couple of months ago.
Thank you. Yeah, and he said when I tried to change my trading, but when I changed me, my trading changed. So I'd love to, and when you say, I'm a sheep and the market is there to take my money, actually, the market is there for me to make money. I never look at the
Mm-hmm.
market as it's there to take my money. Now, there is opportunity for me to lose based on my own decisions. So I am not a victim to the market. I am intelligent, I am learning, and I am allowing myself some losses for the learning curve. So you are making an investment in you, in trading, and I think it's a really good opportunity to get into the chart here and see what we've all traded against the trend, and maybe it's a good idea to get into the chart here and see what is the one thing that you could have done on this trade that you would maybe carry with you to the next trade.
Yes. Um. So basically, uh, because on SSR, um, when it comes to resistance areas, they will be easier to pop over. What I should have done here was that like my read of the tape was not good. I should have cut even faster actually, because usually on these you want to see the rejection like immediately. So what I did was I was trying to focus very hard on the tape, and I was seeing it work. Like like it did pop down because usually when you like short front side, like the stock will seem weak, but then it will just hold the dips and just rip. Like I don't know if you understand what I mean, but when you're shorting front side, which is a very bad thing to do, like the mindset you're like you think is gonna go down there, right? But at the same time, it's like you don't know that it's gonna be that strong, right? Like it's very simple, but basically on here, I just didn't account for it to be so strong because I forgot that it was on SSR. But like I should have like retained these things. Like my mind wasn't there because I was trying to focus on the tape. Um, but yeah,
But
that's definitely
you should have had your stop in place before you ever got into the trade.
yeah, that's
That
true. Cause y- yes,
And that's a
that's
good point.
definitely
That's a
true.
good point. And actually, I would really like to stop, to pause, and maybe this is a really good point for you to take that in.
So, Hussar, can I ask you one question?
because you'd be less emotional if you knew what your stop was before you took the trade. If you take the trade and you know where your stop is, you know what you could potentially lose, and
And
or you know what your reward would be if you scale out, if you have multiple contracts. and you
And
scale
30,
out, you break even, and then you let it ride. And if it doesn't, you break even, and you go on to the next trade.
but even the more to hone it in even more, those are great points. To hone it even more is, I really like who was ever speaking just now, is
Leo.
yeah, Leo, is that where was the stop? And that's okay. And as far as I'm looking at the chart and I'm going, 38 bucks, bro. You got the. I've had a more expensive lesson than this, but I don't want to
Yeah.
get into comparisons because comparisons. I don't compare myself to Jay and any of this. It's not for me. I can't say it's garbage. It's not for me. It's not what I do. If someone else does that, that's okay. It's not what I do because I can't do it. But um, I'm like, 38 bucks. Wow. But see, this is again getting into comparison. I'm like, wow, this guy learned a great lesson for $38. I learned that lesson for 6,000.
Yes.
Same.
Oh.
About three or four times.
Same.
I just wanted to say though,
Okay.
the
So
issue
I think
there.
Yeah,
the
like
takeaway,
totally, right?
I think the takeaway from this is that the takeaway is you have peers,
Yeah.
you are heard and you are seen, and you learned a we're telling you you learned a great valuable lesson for $38. I'm stupid is not accurate. That's just not accurate. But you can keep saying to yourself you are stupid because you are in charge of you. You have agency over you.
Mhm.
But maybe I don't agree. But if you keep telling me you're stupid, I will at some point I will believe it. And then but you learned a great lesson for $38, and there's nothing wrong with what you did. You saw an area, it was pushing, maybe it wasn't the best. Okay, great. If you would have had your stop, you just said, I tried something there, it didn't work out, I lost $38. What a valuable lesson. Now for the next trade. So I just think your chart, some of us look at this and go, oh wow, I lost $38. I kind of did a bonehead move. I shorted
Yeah.
the front side. Uh, it's
You had a stupid trade, but you're not stupid.
Mhm.
Yeah, I
You know,
guess.
you
not a valuable trade.
don't put
Not a
it
valuable trade.
don't put it on yourself. Just put it on. Okay, you saw something, you took it, you took a chance, it didn't work out, but you're not stupid for doing it.
Mhm.
And lesson learned. But I think this is a really good. I think this is a really good topic for the psychology room to go into that because I think that you'll get a lot of support there.
Yeah,
The problem
definitely.
wasn't necessarily that he didn't know where his stop losses was. I was there when he was fighting that front side. I was asking him, and he was telling me that, like, oh, I'm gonna short here. I'm gonna stop if it does this and all that, right? But the exits weren't the problem that I was seeing. Seeing it, watching it live. It was his psychology and his entries. He like the volume is like he's talking about. He's working on it right now. The checklist and he's reading the book and the psychology and we have to like find like what criteria needs to be met for there to be a good entry so that you can have a good trade and you can start in a good position because his exits were present and he did stop on those exits, but it's those paper cuts that added to his max loss. And so if his exits are defined already but his entries were just bad, we need to make that checklist, and that's something we could keep working on, Christian, as we go. And in regards to the volume and
Mhm.
all of that, like psychology wise, you're gonna work on it. Keep talking. You can talk to us when you feel like you're mentally not there. We'll be there for you.
Okay,
But
Mhm.
in
guys.
regards to the checklist, we'll do that for you.
My turn. My turn. So first off, this entry and this trade, I think it's a great trade.
Me
Okay,
too.
this is a great trade.
Exactly,
Okay,
exactly.
No, it's an
now
amazing job.
your management style might need some fixing, right? So this is where I was telling you guys earlier. Sometimes you take a good entry and what you think is a good setup, and other days it would have worked. Had you been 1 minute later, it would have worked. But this was a great trade, so don't be hard on yourself about it because tomorrow or Monday it might work, right? So that's the first point.
But Eric,
Second,
as you were saying, It's a matter of stop losses and volatility.
Yeah. And
Hey,
so
how
then
many trades of Jay's has he taken like this with a 10-cent stop?
exactly, but what does a professional trader do is the next question that I ask myself when I am in this situation because uh, uh, Gondola, I've been where you are. I
Mhm.
know those feelings so many times, okay? And I'm going to walk through it a little bit. First off, I asked myself, well, what would a professional trader do? What would Jay do? Well, Jay wouldn't have stopped out. He probably would have held this trade because it never got through 10, and he would have started with a feeler size. And then as it's starting to work,
Added.
he would have loaded into it and he would have made $7,000, $10,000. Okay.
Yeah.
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 But
That's
here's
true.
the thing, Gondola, you are on the right track right now. You are so close. You're 30 seconds to 1 minute away from this being a home run trade. So I used to, when I was trading big caps, I would miss the entire trend. I couldn't get into the trend. I couldn't hold the trade right. I was messing it all up, and it took me a couple years to perfect it. It doesn't happen fast. I'm just not that good at following my own rules and adapting quick enough. That's just my personality. It took me a long time to be able to trade the way that I do. And a long time in a couple years is actually not really that long. But you're close. You're on the right track. In 6 months from now, you will be nailing these things. And in this case, you just needed
Mhm.
a wider stop, a feeler size, so you could let it run and get comfortable in it. And if it would have dropped, and you would have not been able to add because it was a small size, you just add on some other pops. Okay, so that's the first thing. I do agree with
Mhm.
what Irish is saying. I'm stupid. That doesn't work. Saying that it's not. By degrading yourself, that's not really going to help you in any way. I mean, you can
Right.
keep
Yeah.
saying it. I've said it to
Stupid
myself.
trade, but you're not stupid.
Yeah, exactly. I've said it to myself so many times, and has it made me any better? Not really. It's not changing anything. And then the other thing I wanted to mention is you said that you're not working, you're not going to school, and you're just trying to trade. Well, what Kyle DC said the other day when I was talking to him was, he makes thousands of dollars each day, certain days of his trading. And he also said that he does some real estate as well. And he said, I'm thankful for doing some real estate because it kind of shifts your mind off of trading. Because when you have a bad day trading, if you don't have something else to go to and do and to change your focus, you're going to be in a negative mood all day. And all the people around you are not going to appreciate you being in a negative mood.
Yeah. True.
So you should probably consider getting a part-time job or something, even if it's just making a little money serving tables or working online for
Or
some company,
volunteering.
volunteering, anything. Because right now, what I heard you say earlier was on trying to make it, trying to give it all and make it in trading. Well,
Yeah.
trading is about longevity. It's not about like, oh, if I'm so smart and I figure this all out quickly, in 6 months to a year, I will be there. That's not the case. In 6 months
Mhm.
to a year, I don't care how smart you are, you're still going to make mistakes. And this was just a mistake, a risk management mistake. You were on the right track, you had the right idea. It just, you know, the market makers were propping it up for 1 more minute. You know what I mean? So having a part-time job so that way you have extra income, you're saving, you have money to spend on your life is really important because trading is about longevity. You might have to do this trading and you might have to lose for a couple more years before you are where you want to be.
Can
Mhm.
I say something to that effect? 100% agree. I've been in the movie business for 35 years, and there's about 3 to maybe 5 months out of the year where I'm not working, so I'm trading. And like I've been trading since December, and I've made some really good money between December and now. I mean, tens of thousands of dollars. But I'm so looking forward to starting this new job, which I'm equally going to make that kind of money because it's a very high paying job. But I'm looking forward to getting away from trading for just a few weeks, 8 weeks or so, or just putting on some micros during Globex. Just stay engaged, because if you're not engaged all the time, then you lose your perspective, you lose your idea what's going on with the markets. So um, it I'm doing this because when I'm 70 and 80 years old, this is what I'm going to be doing for my retirement. Even though I have a retirement, this is what I want to do to stay, keep my mind sharp,
Mm-hmm.
um,
Yeah.
to
And
stay engaged in something. But I'm looking forward to getting away from the markets. I mean, I've been, doing this for 16, 18 hours a day sometimes, and I've made good money, but I want to get away from it and go, work
that's
12 and
Yeah,
15 hours a day in the movies.
exactly.
and I'm the same exact way. Like I run my own business, but I've automated my business so much that it doesn't actually take a lot of time. So what am I
Amazing.
doing now? I just bought this like really junky house that not for me to live in, but it's going to be a rental property, and I'm going to go in there and I'm going to fix a lot of it myself. I'm going to go turn a wrench. And
Oh,
could I hire workers and all that? Sure, I could, but it's an opportunity for me to switch things up, to step out of the mindset of the market where I'm sometimes hard on myself and I'm doing something different. And that's for me in my lifestyle. For
And you're going
you,
to have your earbuds in listening to CNBC or Fox
yeah,
Business.
exactly. And that's for me. And that's where I'm at right now. But for
That's what I've
you,
done.
maybe that's just going and working part time. And I say serving tables
Mhm.
as an example because I served tables at a restaurant all through college. And I was paying my way through college. And I didn't have a business, I didn't have 2 cents to rub together. And every time I did get a little bit of money, I spent it party, in
mm,
college. So it's like what you got to do is have something that you can shift your mindset, whether it is like Irish was saying, go volunteer and give your energy to helping others, or go make a little bit of money in something else. Because with trading, I've seen so many people. I've been in mentoring now for 7 months, 8 months, and I've seen a lot of traders already come and go. And I've been trading for a couple of years, and I've seen a lot of them come and go.
Yeah.
And what it is they get in here, they're like, yeah, I'm smart, I'm gonna do this. And then when they make a mistake, they're hard on themselves. And then when they make mistake after mistake every day, which is part of trading and part of learning, then they can't handle it, so they kind of quit. And all I'm saying is, you gotta tell yourself, I'm here for the long haul. I'm ready to learn for 3 years. I'm ready to pay for my education. $38.
Mhm.
That's cheaper than going to college. Okay, so it's just like I was saying. You want the $6,000 loss to teach you the same exact lesson? So no, you don't. So you're doing really really good, and you're learning a lot. So just keep it
Thank
up.
you.
But
Yeah.
go get some extra money too, because you cannot. Don't rely on trading. If I were
Yeah,
you, I would say I don't plan on
Yeah.
making much money from trading for the next 2 years.
exactly.
Because the problem is, if you size up too fast because you're overzealous, in 6 months to a year, you're really thinking you're doing it, this same mistake is going to cost thousands of dollars. Same
I,
exact
Yeah.
trade. So, that's the thing is that's why I don't do really big size, and I'm not risking thousands of dollars like I could. But I choose not to because I know the more time I put in, the better I become. The more I understand every little mechanic of trading means I'll be a trader longer. And I'm 30 years old. I want to trade till I'm 80 years old.
I'm 60. I want to trade till I'm 80.
Exactly.
Um,
It's a great job to do
I've been
for.
doing this for 10 years and I'm just now in a mentoring program.
mhm.
Exactly. So what does that tell you, Gondola? That Leo's been trading for 10 years, and then just now he's doing the mentoring.
Yeah.
Well,
So
but I've blown out two accounts, but I've also now I have five fully funded accounts.
But for Gondola, you're thinking in your mind, in 10 years, I won't need mentoring. I'm going to be making all this money. But then you got a guy like Leo here that's like saying, I make money, but I'm here to learn more, because trading is always about evolving and learning and adapting and stats and everything.
mhm.
So those are just a couple takeaways. I agree with Irish. Do not be hard on yourself, because honestly,
Mhm.
this is an example I was telling you earlier. This is a great trade. A little bit wrong on the risk management, but if you go take this exact trade on Monday, it could be a home run, and it will make you more than $38 loss, or whatever the max loss is. You
Yeah.
know. But then also, go make some extra money somewhere because you got a long ways to go
Yeah.
when it comes to trading.
Right.
You're
It's
Um,
supplemental income. It will make you feel better. It will
Oh,
Yeah.
totally.
really
totally,
Yeah.
support you. Your
100%.
confidence.
Like
mhm.
if I'm making 5 grand a week working my regular job, and then I wake up one morning because I put on a Globex with a wide stop, and I wake up in the morning with another $1,000, I'm like, yeah, you know. But then when I'm not working, if I'm making my day rate when I'm not working my regular job, then yeah, it's a business. And you
Yes.
take losses and you have expenses with commissions and fees, and you don't let one trade get you down. You just, like last week, I mean, I had some really good trades, but I also had a couple of really small losses. But I didn't let that bother me. You just wake up the next morning and you look for a trade and you take it.
And it is like Leo saying, it's a business. If tomorrow I want to go open a restaurant, I'm gonna have to invest money. I'm gonna have to sign a lease with some commercial plaza that I want to be located in, and maybe it's a year or a 5 year lease. So I'm taking on risk. And do I know if people are gonna like my food at my restaurant? I don't. You know, I like it. You know, but if I go do that, there's a lot of risk, and there's a lot of money at risk. And it's same thing with almost any startup or any business. You have to put up a lot of time, energy, and money, and you have to be drawn down for then it to work on the back
Mhm.
end
So
and have that sustainability. So
you guys are very right. Because what I did was like a few years before, like I started working and then I saved up all my money and then I started to trade because I didn't like I wanted to be someone smart. I wanted to be something, and I felt that if I gave him my all, cause like I saved all my money, and then I felt like I could do this for like a year, and then I could, wow, I'll make money. You know, I don't have to work anymore, and so
it's
yeah,
that's
that's
that's different, man.
Yeah,
That
no.
Make
that
Sorry,
that
dude.
decision.
dude, we
Make
all
that
thought that.
decision.
yeah.
Make
Um,
make the decision when you actually have the proof at hand. In other words,
Yeah.
you can have
Mhm.
that as a goal. We respect that. I think we're all making goals, sometimes short term goals, medium term goals, and long term goals. And they are guides because something could happen between now and then, and I could change my mind completely and stop trading tomorrow. So I'm open, but I have a goal in mind. But um, the track was, yeah. So so right now, I think you might want to try this on for size, which is I'm trading right now, I'm becoming consistent, I'm learning, and in a year's time, I'd like to reevaluate what is happening so that I can make the decision whether I'm going full time or continuing part time until I have a little more capital to depend on. And when I am able to, and that I have the capital at hand that has been earning, so now I'm trading with my cushion. So there's a lot of things, and I'm not using my own capital any longer.
Yeah.
Right. You're
That's what
using
Jay, and that's
you're
what
using
Jay.
capital that you made, not what you started with.
Yeah.
Mhm.
So I would say that, and I have to go back here and say I really agree with Eric on this. Is this trade? I'm looking at this trade. I'm going, what is so bad about this trade? Okay, so there wasn't a stop. Lesson learned. Okay, you tried there at the yesterday's high. I'm like, sometimes you try it there and you put a 10-cent risk on or a 5-cent risk on, or you might re-add, or but that comes with more advanced. Jay had me start trading in the open, and in the beginning, I was all over the place. I had to immediately downsize. I was like, "Whoa, these things move fast." And then I started practicing over and over again. I'm like, "Okay, I got the rhythm of the open. I like it." But it took some time and it took some reevaluation. But I think this is a good trade. Like Eric said, it was just a little bit. Oh, there was some skill there maybe that you don't have right now.
Yeah.
And you know what?
Mhm.
Congratulations that you stopped out of the trade. Congratulations.
Okay, so may I say something?
yeah, but
Uh, Ganala,
Mhm.
may I ask you, how old are you?
I'm 19.
Okay.
Yeah.
Okay. Right.
Uh,
Okay. Okay.
you are
Okay.
going to be a fantastic trader, dude.
Yeah.
Yeah, yeah.
Thank you.
See,
As
go
long
ahead.
as you take care of the life thing, honestly, sorry, Raymond, please go ahead. I'll have
Okay.
something to say to him after you.
Yeah,
Sorry.
yeah. So, 19-year-old, $38 loss, and you learned a fantastic lesson.
Mhm.
Okay? We all learned too later. And you are saying you are stupid. It's a stupid trade. There is only two rules in the trading: cut your losses, run your winners. You managed your rule. The first rule you respected, you did that. There is nothing wrong with you.
Mhm.
Okay? So I see you have a long, long career in this trading. But as others said, make sure you have another job or part-time job or some fund with you.
Yeah, for sure.
Yeah, don't be scared as a newbie. So how long you're trading now?
Uh, for 1.5 years.
Okay, okay.
Jay
See,
Trader started off when he was a teenager. So
yeah,
think
Yeah.
about that.
yeah, yeah,
You're
yeah.
ahead of the game.
And one very important thing is congratulations for your sharing this story, and you are sharing your feelings. So most of the people,
Mhm.
they are shy and they don't share. They will think like, oh, I'm stupid. How others think about me? So you shared it with us, and now you are getting very good motivation feedback from
Yes,
you.
definitely.
Yeah, yeah. So you have nothing to worry. You did a good job over here. You did cut your loser first. That is the first rule in the trading. You did that. So let the winners show up. Let them run. That will happen later. All these habits, see, wrong habits makes a trader stupid. So you are not doing any wrong habit. See, as a human, how we are running. I mean, we start walking, we fell down, again try to start walking, fell down, slowly stabilizing our legs and start running, right? There is a lot more room for you. You'll be there. You'll be there.
Yeah.
Don't follow any other alerts or anybody is sharing in the Twitter or any teenagers posting in YouTube. They are stupid. Don't follow that. Here we have Jetrader and we have a group, nice group. Just follow only that. Spend a lot of
Mhm.
time on the screen. Spend a lot of time on the screen. Listen to, I mean, just watch Jay's trading. Just watch Jay's all these webinars and all the recordings. That is enough. That is more than enough.
Yes.
Okay. Yeah, I'm done here.
Thank
So
you guys. Thank
yeah,
you guys so
Yeah.
much.
So, Gondola, I
Yeah.
just want to say something. Okay. So, for a 19-year-old, it tells me that your priorities are advanced. Okay. Because I hate, nobody wants to compare, but this is unique, to have a passion for something that most people probably wouldn't bother in your age. So,
Mhm.
give yourself some credit. Secondly, so when I got introduced, because I worked for the government, we got trained by firefighters, and one of the things that they tell you is that you got to keep multiple circles, okay? Because this would work as an outlet in case something is not working well with other parts of your life. Now, the main thing is that in trading, you want to operate it from a position of strength,
Yes.
meaning meaning that if you have your other if you have your life in order, or maybe you're working towards that, you can have trading on the side to work on it too. It's like my side project, right? So just make sure that you know because the thing is, sometimes when you take losses, it's not about how big it is, it's about how affordable it is, right? And if sometimes you feel that you're getting strong feelings because you've taken like a $40, 50, $100 loss, it means maybe that there's some questions about how your feelings are being triggered by the affordability of the money that you're losing, or you think you might be losing, right? So just make sure that you do have some supplementary income to go ahead and offset um, you know that sort of like
Yeah.
negative emotion that you would get from having to go ahead and lose a minuscule amount. As for a trade, this is a good trade. All I have to say is just be aware, okay, of this high right here. So you shorted here on an extension, but be aware you're going to encounter some resist or some resistance or support over here, right? So is this really the extension that you're looking after, or is it going to be higher where you're going to get more R towards that first point of support, right?
Yeah.
You see how they extend it, they blow it up, and you're shorting right here so close to support, and your stops right here. It's like 1 to 1, right? Whereas
Yeah,
if you
that's
were
true.
shorting maybe near the 10, right, round number, short here, this is your stop. You have at least maybe not 2R, maybe 2R, right? Going from, entering here, stopping at the 10, and then you have your first point of support right here, right? So just be aware of your R calculations whenever you short front side like this. It's so dangerous. Like, don't even do it full size, right?
Mhm.
Um, and and y- because the market's moving fast, be aware to have that stop in mind immediately, as soon as you put on the trade, or maybe mentally if you can do that. But just remember, okay, like if things in life not going too well, it's okay to take a break. I mean,
Yeah.
markets never go away. I mean, I've been involved in it since 2008, and I've been coming and going, right? Different markets, and it's always stayed the same, right? So, there's a lot of opportunity for you over here to learn. I mean, I've been to a lot of mentors, and I think for me, Jay is the only mentor that would show you statistics and results. Okay, that's the big thing. Okay, because and it's a natural system. So as long as you know what you're looking for, you can replicate. If maybe not to the extent that he does, because he has like 20 years experience, right? But to an extent, there is if you're trading the setups correctly, then the profitability curves could be similar. And also, like in business, do not expect to make money, first 2 years. Just expect that you're gonna make a lot of mistakes, and your question
Mhm.
to yourself would be, can I afford to make those mistakes? And lastly, I know you've been tracking your trades. I know you know your win rate, right?
Yeah.
So and take an average of your win rate for the past weeks and globally for your entire trading since you started here, and take a look at your average R. So maybe in TraderView, you take the average win, average loss, and then you divide it, and then you get the R. So say for example, your win rate is say 50%, right? So
Mhm.
you know that if you've taken, in the day, that if your R maybe is like or sorry, you took 4 trades, or you took three, and you already lost in two. So what's your win rate now? 33%, right? Is that your average win rate? Ask
Um
yourself, is that your
so
average win rate
mhm.
per day or maybe per week? No. Should you keep trading then, even if you haven't hit your max loss? Maybe not, right?
Mhm.
So always think like a general when you're in the battle, and know when it's time to take it out, and just like back down from the battle. Okay.
Yeah. Thank you. Yeah, that's good. So there was my paper trading win rate, which wasn't that bad. It was like 40-50% with
Okay.
2.5 R, but then when I went live, I realized that how how big the commissions actually were,
Yeah,
and then I
because
was like, "Oh crap."
if
You
you're
know.
risking like 30-40 bucks, your commission's probably going to be like almost 5 to 10%, right? Given you're trading with
Um
trade zero.
so
um
so cuz with this day, I lost like $80, but it became 120 with the locates and the fees.
yeah, no, I
Yeah.
mean, like I said, in the function of what do you call this, the commissions would decrease as you increase to a more to a bigger size. Okay, because
Yeah.
like obviously if you're trading like one share, right, and you're paying $1 for that share, it trades zero, which is what they do. Plus, like maybe your locates, which is, I don't know, sometimes could be $1, sometimes could be 10 cents. Then you're already at the negative. Even if you had like a 2 hour trade, really it's a 1 hour trade, right? So
Yeah.
um, just be aware that's because of the size you're trading, the commissions are really gonna play a big factor in your trading, and just you gotta stop thinking that it's. I mean, we're Canadians, right? I know you're Canadian, and I know we only have ID and trade zero here.
Yeah.
So
Okay,
just
one
be
one last thing, guys, I'd like to touch on, and then we can kind of wrap things up, unless there was something someone else wanted to say. But one more thing that I haven't heard anyone say, and that is kind of about dealing with the mistakes and the emotion of what kind of happened. So, an emotional tracking that Jay wants us to do. So, Donald, you take this trade, right? And you were actually correct. I mean, the risk management wasn't correct, but the plan was correct, right? Because this trade would have been awesome. Okay.
Mhm.
Then, when you lose on this trade, what happened after that? You have FOMO because you know you were right when you see it go down.
Yeah.
And then what does that do? It triggers your emotion because I think you said that you went over traded after that.
Yeah. Yeah.
So one thing you need to write down on this day in your journal about this day is that you had a good setup, you took a trade, you kind of missed out, you were correct on the direction, but that emotion triggered you by getting stopped out. It triggered you to overtrade, to go fight, to kind of want to make it back. So you need to realize that now that you know that about yourself, it's in you and it can happen again. So this is something to be aware of, because if you
Mhm.
do this again, you don't want to get the same result again by going and over trading and fighting and doing some bad setups. Okay, so make sure you're tracking that now, because you're on your way. So the more tracking and statistics and things like that that you do, and rule-based systems that you're creating, the sooner you'll be there. But it's important that you know this about yourself, that you took this trade, you messed it up a little bit, not a big deal, but then when you see it going in your direction, it really gives you FOMO, and it triggers your mind to want to trade more, to go fight, to try to make things back. So realize you have that in you, and that you need to be aware of it, because if it happens on Monday or next week, you want to get ahead of it before it starts happening, and say, okay, hang on, I took this trade, I messed it up. I need to take a step back, because if I take another mistake on another trade, it can, you know, I can slip and fall off the cliff. You know what I mean? And
Mhm.
that's what happens. And that's what traders often do as a mistake. They they dig themselves in a hole. They draw themselves down on multiple days, and then it makes it harder to recover or to get ahead. So just realize now, it's super important. And I only say that because I do the same thing. When I was right on a direction of a trade, but I needed to hold it for another minute and then it would have worked out perfect, I get so worked up and I'm ready to fight the stock. I used to. Now I'm like, okay, good job, market makers. You did your job better than I did, and it is what it is. So just realize you have that, and be aware of that, because that's something I just didn't hear anybody say.
Yeah.
And
mm,
emotion
very good.
tracking
That's great.
and mistake tracking is really important. And I think
Mhm.
it's important that we do those types of things, because we all have different personality types, and then we go and fight, let's say, um, or something along those lines. So just realize you have that in you. But honestly, man, you're 19 years old. You got a ways to go. You're ahead of all of us that are older. You're ahead of all
Hello,
of us.
Mhm.
hi
So
guys.
I see a Lamborghini in your future.
Thank you.
Nice. Boom.
Now that you told us you're 19, we demand you go get 3 jobs, never sleep.
Real quick, Christian. Christian, are you free? Are
Yeah.
you free a little bit after the meeting?
Yes.
Okay, I wanna discuss the starters, the entries that you made on the trades after. I'm not the
Okay.
trade you made here is good, but once you started getting emotional because of this, I wanted to show you what the level two and what front side looks like, because
Mhm.
those entries, you had good exits on those front side moves, but your entries were bad, and that's the one I want to deal with. So
Okay.
if you can meet with me in our
Yes.
group, I wanna
Yeah.
share my screen and I wanna show you what my level two and tape looks like as to how I was able to avoid fighting that front side, so you could avoid those bad entries. Okay.
Yeah.
Okay, let's let Mugen finish us off, and let's call it a day here, folks.
Hi gang, how y'all doing? Hope
Hey, Mugen.
everybody's well.
Yeah, you get the closer, man.
Yeah, I'm the closer. Christian, I just wanted to say it was a pleasure to be there and reach out to you when you needed to, and
Mhm.
it's I'll do for anybody. I just wanted to just touch on what Eric said, and we spoke about it that day as well. When I mentioned to you that focus on discovering yourself and figuring yourself out uh, first, from a psychological point of view, so that you know how to deal with situations, and then later on, you know, you can focus on those academic trading books and things like that. But you have that advantage of the age on your side, and discovering yourself sooner will be really a benefit for you, especially if you discover your psychological side and how to deal with things. Um, and as we had also mentioned that day, you got to look at this trade as it was the cost of doing business. You had 10 apples, you sold seven, three of them went bad. You had to take that as a loss, and that's what happened here. You diarized, you've written down things, you've made a note of the volume. Don't forget, you remember moving forward, we said that you're gonna try and draw a line at 1 million volume, so that if
Mhm.
the
Yes.
volume hits a million, you're gonna think twice about shorting that until the volume drops, especially if it's SSR, it's above 1 million, it's above pre-market highs, it's at the high of day. There's no need to go and put yourself at risk there. When you wait for the volume to come down, then you're not involved in the front side of that move. Um, but just you made notes of these things. I think for now, what you should focus on is discover yourself more,
Mhm.
and totally agree with everybody. No need to call yourself names. No need to. This is not you calling yourself names. It's only the mind that will divide yourself into two. Like we often hear ourselves saying, I am upset with myself. Who is I and who is myself? We only one person. We can't divide ourselves into I and myself. But that's what the mind will do to you. So when you're trading, uh, be prepared, that you're going to make mistakes. And remember what we said that day. We don't lose. We're going to win or we're going to learn. Simple as that. It's as simple as that. We're going to win or we're going to learn. And it's that perspective that you want to apply from this beautiful age. You're a baby, as I said. You're 4 years older than my firstborn son. So you've got that that advantage. And
Mhm.
as
Yeah.
you discover yourself, you'll be better. And always there, a phone call away, a message away. We're all we coexist in this world. None of us are here on our own. I certainly believe I'm not. So if ever you need, always somebody there that you can reach out to.
Yes. Thank you so
Good
much,
luck.
Mugen,
Good luck.
and you guys. Mhm. Thank you.
It's me in the room.
Okay,
Okay.
everyone. Thank you so much. Great meeting today, and thanks for everybody that kind of hung out with us and participated. I really love these meetings. They're so much fun for me, and I enjoy our whole group because, like I've said to you guys all many times before, um, you guys are all super smart. You're all very smart people, and in most like businesses, you don't get to meet a group of really smart people. Maybe if you're like a doctor or you're an engineer, but I do some real estate, and I can tell you some of these drunken construction workers, they're not that smart. So it's fun to spend time with you guys and to hear all the different perspectives. So have a great rest of the day. Study, do some stats because stats give you confidence and conviction, and be disciplined to keep going and keep the drive going because that's what trading is all about. It's going to try to wear you down and draw you down, but you just got to keep going with it. So have a good rest of the weekend. Message us if you need. We're all here. That's why we're in this group.
When it does wear you down,
Mhm.
move on to something else for just a little while. Get away from it.
Yeah.
Yeah, exactly.
But
Thanks,
but
everyone.
thank you
Have a good one.
guys. Yeah.
See ya.
Thank you so much.
All right, out.
Hey, Nicola,
Hello. One sec.
can you hear me? Can you hear me?
Yeah. By the way, Mark, thank you for doing this. Um. Yeah. Mhm. Um. Wait. You gotta show your screen, or do you want me to? Okay. So Husa was the first one that I lost to R, and then Agri was the second one that I tried to short. The second one, the second one was Agri. The first one was Husa. Mhm. Mhm. Oh dang. Mhm. Yeah. 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 So like I remember you talking about that on the day of, as well. Mhm. Yeah. Mhm. Mhm. Yeah. I'm not sure, but I think he was using smaller size at first, and then he mentioned using full size. But yeah, I can see now. Yeah. Uh, no, it's a bit blurry, but I think it's manageable. Yeah, it's okay. Um, the middle. Wait, is your no? Cause I can't see your mouse moving. It's like it's. No, I can't see your mouse. No, no, it's fine. I think it's because you I think it's because you need to show your like whole screen and not just the application. But I'm not sure. No, it's okay. Don't worry about it. Yeah, I'm clicking it. Right. All right.
We'll
I'm
stay
in.
on the Discord room.
Mhm.
Just meet me on Zoom, and then we'll stay on the Discord chat
Mhm.
so I don't echo. Okay,
Okay.
can you see my mouse and all that?
One sec. I just gotta. How do I mute you on?
You just go to participants, I think, and then you find me, you hover over my name, and then you mute me. I think it muted everyone already. I should be muted, right?
Sorry, I'm a bit. Wait, I'm participants. More pin. n- Oh, I. Okay, yeah, there we go. Sorry it took so long. Uh, no, it says Mark Law's screen. Um, no. I wonder if I did something wrong. I'll show you the picture. It's in the Discord. I think options. Oh, there we go. Yeah, yeah. Yes, it works now, and I can see your mouse. Yes, nice. There we go. Yeah, we're boomers. Yes. Mhm. Yeah.
This is the tape
Yeah.
where my mouse is. This is the tape too, but I had it size bigger. This is like what was it? Like 500, and this is 1500. So the bigger size comes here. And so the faster this tape goes, the more volatile the stock is.
Mhm.
And this just shows me more of the details.
Okay.
So pre-market high is at 235, right? Oops. And so we'll keep watching. We'll watch it. It's above 235, 238, 235, 234. Good amount of red, orange tapes in the bottom, in here, and the tape, and tape here. This is where I shorted around. Maybe I was late. Okay, yeah, so that's where I shorted right here.
Yeah.
And as you can see, the 235 level was the pre-market. It breaks down, goes up a little bit, but it couldn't hold that level, goes right back down. That's where I shorted. Tries to hold it a little bit, which was a little shady, but then goes to the 220s, which gave me confidence that this was a stuff move. And you see a good amount of the tape speeding up when it did move up, and now it's mostly red. And that's a successful stuff move on the pre-market high rejection. Do you get that?
Mhm. Yeah. Yeah.
So that worked because it as soon as it broke up, it broke down, and I'll show you the tick chart on that too. It helps you visualize the level two better. You can see this on the book map, so you don't really need to use the tick chart. But I'm gonna show you anyways because I can do what I want. Just kidding, not Houston. I'm gonna. You can see this one, right?
Um
Oh,
no,
this one.
it's not showing on your screen.
Hmm. Oh no. Oh, here. How's this one? Can you
Yeah.
see my toss chart?
Yeah, there
Okay,
we
cool.
go. Yeah.
You can see this on bookmap, so you can go back yourself and see more detail, like the how big the dots are, the green dots, the red dots. Um, oh my gosh, I gotta scroll like a bajillion years away. Okay, so that stuff move, if we were to be able to visualize it,
Mhm.
what happened is that it broke that stuff move, right? And I wanted to see it go back below the 235, which it did here. It held that area, but it couldn't keep pushing up. And so around this area, right here or right here, is when I shorted in the video that you saw. And then
Mhm.
what I want to see is an immediate uh, fall after. And so that stuff move was fairly easy.
Yeah.
So this is an easy kind of stuff move. This isn't like Husa. Husa probably showed you something a lot more harder in regards to level two and the tick chart.
Cuz Husa
Yeah,
cuz cuz on Husa it did stuff back down, but it's just that it held. And
it
then
held, right?
yeah,
Yeah,
and then on the like when it broke out, it was just like a huge like push. So like it jumped like a few cents, right?
yeah. I
And so
could probably go back through it.
that's why I had to stop out like super.
And that's not a wrong move. If it holds, if you don't have your stop loss uh, in a very wide range, it's better to hold. It's better to get out just in case it holds. It pops, and then get back in right away if it does stuff in the end. So, is this the one that you're looking at, Tusa?
Yes.
This was on 310, right? So 2 days ago. Oh yeah. So it moved up. This was the
So,
sorry.
so like I was trying to short the like previous day's high. It was like 9:45.
945. Okay,
Yeah.
thank you. That's the pre-market high, and then this is the yeah. So it consolidated a little bit above that. It broke it. Then it held. Where do you think you shorted here? So I can have an idea.
My short was 42,
942,
and then I stopped at 962.
942. I'm guessing because you were a little bit early, you probably shorted there, and then you covered at 962 right
Yeah.
there. Do you think that's accurate?
Yeah, cuz I
And
remember that as soon as I shorted, like I was like up a little bit, but then like after like a flash, like I was down like 2 hours. I was like, oh crap.
Yeah, yeah. So it went up above you, and then boom, it it freaking died and washed after you and after
Yeah,
you covered, right? So
yeah.
this isn't easy. If I had the level two on this, I don't think I had the market data, so I wasn't watching it. This is something that I would have got stopped out on, but also at the same time, I would have gotten back on like around here, 952, 951, after I see that huge move, stuff move.
Yeah,
Or
so
maybe I would
mm-hmm.
hold, this is the previous high day, I would short again here, risking like 960 or something like that.
Cause I was a bit in shock. I was like, what just happened? And then I felt like I was chasing. But then yeah, definitely I think I should short the backside instead.
It's easier said than done because at that point, when you got stuff like that, when you got squeezes like that, you don't think to short this because you're already like shocked, right? This is what
Yeah.
happens with me. That's what happened with CLSD yesterday
Mhm.
because the stuff didn't happen right away. It moved up, it held, I covered, and then it pushed up even more, and then it then finally stopped.
Cause I felt like how can I explain this? Um
Mm.
cause when you short and then you stop out and then you short again, you stop out and then you short again. I kind of wanted to avoid that. So,
Yeah,
yeah.
that's fair, and that's a good rule to go by. Because if let's say this is what I did, right? I
Mhm.
shorted this right here,
Yeah.
right? CLSD. This is what happened yesterday, and then it washed. I thought I was in a good position, then immediately reclaimed, and I think I stopped like right around here,
Yeah.
and so I wasn't happy with that, and I'm like, okay, is it gonna go up? Volume was increasing, and all that stuff, and then it finally did this move, and you could say I could have shorted here, but then I would have gotten stopped out here again. But then I could have shorted here again. So your rule of okay, if it messes up with me once, maybe I don't want to short it right away again. Maybe look for an easier play, right? Like where AGRI, right? It gave you such a simple stuff move, then boom, it went down and it didn't play games with you. That's the kind of moves that you want. Whereas
Mhm.
CLSD, pre-market high, broke above it, went below. I shorted it below. Then it played games here. Then it broke here. Could have shorted that. Could have shorted that again. Then boom, get stuffed in my face, or squeezed in my face. And again here, squeezed in my face. Then here.
Yeah,
You,
that's
if you want some peace of mind, you know, ignore. Don't play stocks that play games like this. You will lose if you short this, right? Like you did with Husa, you shorted that first thing and then you got stopped.
mhm.
Your rule of avoiding it after, not a bad rule. Because if it's gonna play games like that with you then, was to say that it's gonna play with games with you again later on,
Yeah.
right? And so it's you want simple and right now for you, since you're still in the beginning stages, you shouldn't want to mess with stocks that play games like this because you will get stopped out like one, two, three times before you get the fourth time right.
This was a gap in extension.
Yeah, gap in
Oh,
gap in
dang.
extension. This was the crap I had to deal with yesterday, and it was like,
Yeah.
what's worse? This was $1.92 stock, so I got a bunch of borrows on that, and then the commission fees, bro.
Yeah.
That was expensive yesterday. I got out for a small loss, right? I got out
Mhm.
like near break even, but then the commissions, then the borrow fees and all that, the ECN fees,
Usually
made
usually the commissions, are they like half of 1 hour for you?
uh my one my uh my 1R is pretty big. I like my max stop loss is my 1R, which is
Oh, okay.
$350. So it was less than 1R. But I'm not trying to get my max loss every time, you know. That's because I
Yeah.
size my my max size is really a lot bigger. So I'm playing in a different kind of playing field, and losing 300, although it's still okay for me to lose. It's not fun for me to lose that, you know.
So like let's say usually like a smaller 1R, which is like the average like size risk of a trade is like 20 bucks. How much would the like locates be? Like half like 10 bucks?
Well, it depends on how much your size is. Like, what my max size would be is, let's say my max size is $10,000. I only want to lose 3% of that, so that's $300, and that's my max loss. And so my borrows, you know, let's say it depends on the price too. Where's my calculator? Right? If let's say it's 0.03 or 190 share, and I want to max size this at pre-market, right? So what is this? 192, 10,000, 192 times 0.3. That's $156 in commission I already lost, right? And so if my max is 300, I only can lose up to 143 before I lose my max. I hit my max stop, my max loss with the
Oh.
commissions and the losses. So you have to be able to calculate that
Oh.
before, right? This is what happens you should be doing in pre-market. Okay,
Oh
I
crap.
want to see pre-market high. Oh, it's at 192. What's the max size? What's the size that I want to short this? 10,000. Okay, what's the borrow fees? Oh, 0.3. So what's 10,000? Oh, I already did it for you. I don't know why I'm doing it again. Sorry.
No, it's
I'll
good.
borrow 5,200 shares. So what's 143.75? How many percentage loss will I need out of that 5,200 shares for me to hit my max loss? What was it? Oh my gosh, that's not right. Wow. Oh my, I keep hitting times. Divide. That's 0.2.75. Okay, if I'm gonna short 192 on that break, and my max loss is 300. Whoops. And the borrows and the commissions add up to that. What's the 0.2? Okay, this is my stop loss right here. See it?
Mhm.
194. So only like 2 cents.
Oh man.
Yeah, so that's keeping it tight. But at the same time, if you're doing like, okay, I'm gonna do half size. I'm gonna do only 5,000. 5,000. Um, 192 divided by 5,000. Sorry, 5,000 divided by 192. Hold on, I
Mhm.
did something wrong because I'm dumb. Yeah, I did. Divided by 192. That's 2,600 shares. Oh, the borrow fees are 3 cents. It's $78. So I already took a $78 loss, right? And so uh, max loss is 300. So I can allow it to go 200. 200 divided by 220 divided by what was it? 5,000. I can allow it to go 4 cents, which is here. This is my stop loss. Get it?
Yeah, this is so you have to with your stop, you have to also account in the fees.
Well, I can't. I don't know what the commission fees are going to be.
Yeah,
That's
that's true.
I can calculate the ECN because they gave me that rate. It's 0.03, 0.003 for every one trade or something like that. So I can calculate that too. But for me, it's like I don't think you should be trying to get max loss in one trade anyways. you should just base it on price action. So for me, it's like, okay, I shorted here. My stop loss is my max. My stop loss, let's say, is right here. Okay, it went down. It should have kept going down here, but instead it moved up. That's shady. Maybe I should get out. Or oh, it reclaimed pre-market high, so I should just get out for break even, so I don't have to worry about getting even close to my max loss.
Cause I'm a bit confused because for you, your 1R is your max loss, but for me, my 1R is $20, my max loss is $90. So
Yeah, you're dealing with it a little bit differently than me.
yeah,
You have to do the math on that to figure out what you want to lose to only lose
okay,
$20 on your 1R.
yeah, yeah,
I
that's true.
I'm just playing with a different size and a different type of stop loss strategy. That what I'm doing might not necessarily work for you at all right now. I know like Fuchs was talking about it on Discord. Um, this is what he's. Let me see if I can find it real quick. Sorry. Yeah.
No, it's good. It's good.
If you go back to literally just yesterday, didn't take me that long to scroll. He also talks about how he manages his risk with Matt BC, and he says his 1R is something along like Matt BC says 1-1, and his Fuchs said his uh, stop loss is 1.5 of the whole amount of money he typically makes in a day or something
Yeah,
like
his
that.
average green day. Yeah.
Yeah. So
Mhm.
he has a different kind of stop loss strategy. So you just gotta find the one that you like best, and you have to do calculations ahead of time, like in the pre-market, right? We're not just in the pre-market. We shouldn't just be talking about, oh, if it goes to this level, what do you want to do? But also in your own time, calculate what those risks are ahead of time,
Mhm.
so you have a good idea of what you're gonna lose, and what you're okay with losing,
Yeah.
right? And
Yeah.
and after that, you have to base off the play on what the price action and the level two is going, because you don't need to necessarily lose $20 for you to get stopped out for your 1R. Maybe it's best to just break it in the money or right at break even, because that's what the price action entails, right?
Mhm.
Do you
So
get that? Okay.
so what you're saying is with a 1R loss, I need to account the locates. So my size is actually not $20 risk. But let's say the locates are like $10. My size is actually like $10 risk.
There. Let me see. You can do that too. 0 point. If it's $10 risk. What was it?
So like my usual 1R is $20, but if the locates are $10, I can only risk $10.
Yep. And then here's listen too. You can adjust your sizing to meet the kind of meet the kind of range you want to give it. So for instance, right, $20. So what is that? Let's say that's what? Is that 0.2? Yeah, 0.2. You allow 2% of $1,000 will net you a $20 loss if you let it go against you, along with the commission fees. You can only really risk 1,000. Sorry, 1% to lose $10 along with the $10 borrow fees that you made. So what you could do instead, so that you don't necessarily um, lose that, is this. What was it? I have it in my. I already calculated it, but I don't remember the. I don't know why it's doing that. My taskbar won't go away. I have an Excel sheet that can calculate it ahead of time. Maybe it'll go away now. So
Mhm.
my max risk is $20, right? And I have a $1,000 account size. My max, so I have $1,000 account size. My max risk is 20. But then let's say because of the commission, I paid $10. My max risk, that's 1R, is $10.
Mhm.
So 192 was the high day, right, for that one ticker.
Yeah.
So my true average is 192 and my max risk is 195. But what the size to have the appropriate size isn't $100 or isn't 100, right? But rather it should be 260. That's what my size should be when I short that 192, so I can have a 195 uh, average for
Wow.
that kind of one-on
Yeah.
trade. I'll do the math and I'll write it down so you can
Oh,
use it later
thank
if
you.
you'd like.
Mhm.
But you can adjust it so that it's always like, okay, I'm gonna short this again, and and I want to risk this, the $2 area, but I only want to risk $10 on that. So what this is, forfeit 4.51 is is the is the distance in percentage wise from where I want to short to the high, and I only want to risk $10. Oops, what is it again? Sorry, I'm not really a math wizard here.
No, 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 you're good.
Something like that. I'll figure it out. But you can make it so that if it does go to $2, you'll only lose $10. But your position, your sizing will be appropriate to that risk level.
Mhm.
So you're not going to go max size here because if you do, you'll have to have a tighter stop loss to lose $10, probably like 193. But if you want to give it some room and let it go up to $2, which is your max loss or 1R loss, you have to adjust your sizing. And there's a math that I will give you later to figure that out. You get it? I'm sorry, I don't have the math right now. I don't have
No,
it in my head.
no, no. My bad. I'm bad at speaking right now. No, it's fine. Um,
And I don't
you don't have
necessarily
to
worry about
apologize.
that too, because for me, it's I right now I'm just going for simple plays. I'm just going for account building moves, and so I
Yeah.
just go for the stuff moves. If it doesn't work, I'll get out a break even or a little bit above if it's too fast, and I'm not gonna let it go to my 1R at all, anywhere
Mhm.
near. And if it plays games like this, I'll avoid it, which I did yesterday.
Mhm. Mark,
So
thank you. Yeah.
yeah, yeah.
Thank
What's
you.
up?
I actually recorded this. I'm probably gonna have to rewatch it. Um.
No, let me show you one more thing too. If
Mhm.
you're before you leave, this is the one I wanted to show you. This is the
Yeah.
reason why I called you. Right. Let's go back to the AGR trade. Sorry. Are you busy?
No,
If,
no, cause like you're like giving your time, so like I shouldn't be like leaving and stuff, you know.
yeah, but I don't want to waste your time. You're busy too. You have a life, so I just
No,
don't want
no,
this to happen to
no,
you
it's
again,
fine.
even though it inevitably will, because
Yeah,
it
thank you.
happens to me. But I
Mhm.
want you to know what you look for you to look out for. So let's watch this again and where you shorted and where I shorted too, but I got out because I saw it hold. So let's watch this real quick.
This was on
And
AGRI.
yep, AGRI. This is when it was going for that pre-market high day again, but it was going
Yeah,
front side. This we don't know it's going front side yet, right? So
yeah.
235 was the pre-market high level. Okay, breaks above
Mhm.
it. When goes below it, right? And that's where I shorted. See that? I shorted it at 231 because I saw it go below the 235 as soon as it broke past it.
Yeah.
Then okay, why is it's holding 231? Why is that? It should have broke 235 and then continued down, but it's holding. And this was sketching me out. You
Mhm.
see this bunch? You see look, and also look too. You see a
Yeah, the
bunch of
red.
red tape, and also Look at the time too. 9:54:16. This candle just started 16 seconds ago. It's stuffed, but it has enough time for the candle to close above it, right? This is what Joel is talking about. It has enough time for it to reverse on you, and it's holding. And you see red tape, but it's not dying.
Cause
It's
the
holding
candle
at
just
2:30.
started.
The candle did just start, so that's one variable. You see the red tape, but it's not going down. It's holding at 2:30. You see those big sides at 2:29, right?
Yeah.
That's another thing. I'm short, like I said, I'm short. I haven't covered yet. I want to see it prove itself. Okay, red candle broke the 229. Now to the 220. Okay, I'm feeling good. Feeling good. Why isn't it breaking down? It's going back up. It's going back up. Oh, now it's at 230 again. You see the bid or the ask,
Why
and
is
it's
your
also showing green and
th-
red, or green and
w-
purple.
why is it purple?
Purple means I just color coded it that way. Purple just means that it the execution price executed
Oh,
above
okay.
this price, so it executed at 231 instead
Yeah.
of 230, which is a really bullish move. So you right here, you see me get out already at 229. That's right.
Yeah.
That's where I saw. I was like, oh, this isn't my stuff move that I saw from earlier. So when you watch the recording later, I want you to like,
Yeah.
watch the difference between this and this, right? Compared to how it died. This isn't a
Mhm.
simple stuff move. Okay, right. Literally 39. We were talking about the candle at 16 seconds. Now
Mhm.
it's at 39 seconds, and it's already above the open where it opened. It's going up to 235. It tried to break down. You see that huge wick right here, right? That was a short trap move, so I was already out,
Mhm.
and so that was pretty shady. I covered partial because I was thinking 235 was my stop, but I covered partial at 229 just in case. And then that's when it held that 230s above 230s. That's when I finally covered the rest of my shares. And I sized in smaller on this one too. Thank God.
So cause what I did before is
Yep.
I shorted pre-market high and then I tried again at the 247, like the new high.
Yep.
I think that's what I did. But
Yeah, and Jay was looking for that, right? 240,
yeah.
247,
And
246 or something like that.
so I thought it was, so like like before it got to 247, I started shorting because I felt like it wouldn't get there, right? And
Right, but at this point, you can tell from this candle and
mhm.
the price action here, I was like, it could still go to 247. I'm not shorting this anymore.
Mhm.
So what you thought, what was your reasoning for why you didn't think it was going to go to 247? Like I want you to give me all the variables, like
Um
systematically, please.
so I got a bit of FOMO. One sec.
FOMO.
I'm gonna get the picture real quick.
Yeah, yeah, yeah.
Um
Please. This because we're going to talk about our entries here. The entries, the exits are, I would say, more important than the entries. But your exits are always gonna be bad if your entries are bad from the start too. So
all right, it's in the
all right,
the dis-
Discord. Okay.
open it. I'm gonna open it
Um,
as well.
this one,
So
right?
yeah,
I'll load.
so I think it was a bit after this. So
So yeah,
like it
walk me
was,
through this.
so the first short was like almost a trend break. Um,
Okay.
because I saw how it kept struggling. Cause like the upper wicks, right, and it was at
Right
the
here, and right
pre-market
here.
high. Yeah, the like the first entry, um, cause I actually cause I tried to wait patiently, right, like a little bit. Um, I shorted the, cause on Bookmap I saw that there was a lot of resistance, and so I
Yep.
shorted it, and then it went back down, and then I saw it coming back up, so I covered it break. break even, like
Right
almost
there.
break
Yep.
even.
Yep.
And then I tried for the new high, and because I saw it was weak, I shorted it as it was, like it was falling down, and so I got FOMO, and so I shorted it a bit weak, but then it just reclaimed, and then I tried one last time, um, basically like sort of the same thing, and as it
Yep.
reclaimed, I was like, I'm out. Yeah, like my risk was really tight, and
Uh-huh.
yeah,
Well, let's watch that because again, this is where Joel's you have to watch the time on the tape
yeah,
to know whether you're about to get trapped or whether you're good, right? So
mhm,
let's look at those areas that you watched, and we can because I what you saw as weakness, Joel and I were like, that's not weakness. They're
yeah,
the you see those wicks. You saw these wicks at the top. Sure, that's fine. I get that. But we also saw the wicks at the bottom,
yeah,
right? And then there's also wicks here, and then there's a wick here, and it's holding the white, right? I'm guessing the white is your 9 EMA.
yes,
Yeah, yeah, it's trapping. It went below the 9 EMA here, but it immediately reclaimed. So let's watch that live, and you can see it.
mhm,
Oh my gosh, I need to get out of this one. So yeah, okay, I see where you're going, but let me show you why it didn't look weak. It looked strong. So I showed you why that pre-market high rejection in this one didn't work. Now a new candle formed. It's gonna go up. A lot of red candles here, but
mhm,
not breaking down. 230. 230 is holding. And also you see this 426 at 2.305, 217 at 2.309. It's getting assisted by algos,
yeah,
not red tape. 230 not breaking, still holding. That's very strong. It should have died by now if it was a good pre-market high rejection. And then when it falls below 230, it's not breaking down huge. It's holding that 228, and it's red tape, red tape, red tape. Except it's not like breaking down big, and it keeps going back up, curling to the 230s,
mhm,
right? And then boom, price gap immediately went to 232, 234. This is a good area to long, honestly, if you see this kind of action. I'm not good at longs, so speeding of the tape, right? You saw that? As soon
yeah,
as this hit 234, tape speed. Look at this too. Boom. Tape is speeding up. Green, green, purple. And then every time it stalls a little bit, right? It goes down a few cents, but it holds. It's not breaking down fast and immediately compared to when we looked at the first pre-market high rejection here. So compare the two over and over again, holding that 230s. Red tape, but still holding the 230s. And you see that stuff move, right?
mhm,
You could say, oh, I could short this one, but it's holding that 230s again. Breaks that 230s, but not breaking down right away. Immediately goes back to 230s,
mhm,
right? And this is what I saw in regards to strength. Okay, and the new candle's about to form. Still holding that 230s. Big size on there, 231. I also drew that trend line with you.
mhm,
Okay, price gap, holding a higher level, the 235s, and higher low here, so it's holding that trend.
yeah.
And watch it explode once it breaks that.
I'm not sure, but I think what happened was it
Yep.
like it went up here, then flashed downwards, and then I was like, oh man, trend break, and then
Okay, yeah.
yeah.
Let's watch for that then, right? So 240, it's staying in that 240 area. It really want to breaks out. See that? Okay, this is an important price
Mhm.
action. 240, all this size compared to the bid, 600, 600, 300, 2000, 7000, 227, which 2K, 2K, 6K. It's staying in that level. Watch this get chewed up. Boom, chewed up. Green tape, chewed up, green tape. Breaks down as it typically does. Oh, and this is where you saw the trend break, right?
Yeah.
And then immediately reclaims 232. The 230 area kept is the key level here, and then it's back up.
Yeah.
And remember, you know that 240 where the size on the ask was getting chewed up,
Mhm.
right? Before it did a trend line break, it was absorbing all those size. Well, guess what? That it's going back up to 240, and those shares on that 240 size are no longer there. They're gone, and they might be short bias right now. The size that got absorbed at 240 are now going to be at the bid as soon as they see that it's back at their price and it's about to break out. So now you have those what was short sellers at 240 that got absorbed that were big. Now they're going to be at the bids covering.
Mhm.
So 238. Now watch the 240s getting caught up soon. Red tape a little bit. Not going down though. Holding that level. Holding that level. 239, 240. And now you have the bigger wall sellers, even though you have some big sellers at 240 getting chewed up right away. And boom.
Yeah.
So that big sellers at 240 prior here in this candle, they got absorbed. And then they had a good short here at that trend line break, but now they're getting caught up in this move. And now you have more buying pressure from them. And I saw this and it was like, oh, that's not good. I don't know why Jay's shorting this. I mean, I guess he has 20 years under his belt. This isn't this isn't for me. I can't trade like this. And that 240, it was holding, right? It's holding
Mhm.
that area. It's no longer going back to the low 230s. Now it's holding at the 240s, right? So let's watch that. I want to watch it one more time.
Yeah.
That trend line break, right? I'm not gonna
Mhm.
stop this time. 240, those big sellers, absorption, absorption, absorption. You think it's about to break out, but boom, they trick you. It goes back down to 220, the 220s, right? And look how quickly it regained 230s after it broke down 220s. Now it's a 232. You see how fast that
Yeah.
reclaim was? That to me, and also I one thing I'm dumb. I didn't mention when that trend line break happened, right?
Mhm.
Look what the time is, 9:58:08. This candle just started, right? It has all the time. It has 52 seconds to
Oh
reverse
wait.
that on you,
Yeah, that's true.
right?
Yeah.
You have to be aware. I'm sorry, I didn't say it before, but you have to be aware of the time too of when it does that trend line break.
Yeah, that's true.
That's what Joel was talking about. This was what Joel brought up, not me. But it was a good point.
Yeah,
So
that's actually
back up.
really good. That's yeah, like I never thought about that before.
Oh yeah, OTC talked about it too, and those mentoring sessions too. He
Mhm.
always watches the time on the sales, time and sales thing, because time is important in regards to how much time they're gonna let you, they're gonna trap you, how much free time that they're gonna trap you. So it's going back up. Let's watch it go to 246, 247. Okay, it's getting absorbed to 240 again. Not as much sellers. Breaks it. Going to the 246 area. Goes rejects a little bit, but it's holding that 240 area. It's not going back below it anymore. And also, like see, right? The candle just started. You're not gonna see in real time when you set your criteria as to look at the volume. What's this gonna help you? What's this gonna do? It's not gonna help you. It's gonna do squat. What does
Mhm.
help you is that after the fact that the candle closes, then you see this kind of trend where the volume is higher, and this can help you, right? If it's been going higher here, higher here, higher here, and it's breaking out to new highs, you can naturally expect it to go up, you go up higher, like right here too, this candle, right?
Yeah.
That helps you, but the moment in time where you're looking at the tape and you're looking at that price action, this little volume bar is not going to do squat. You need to
Yeah,
be
that's
able to
true.
identify the levels. It's different because you have bookmap. So if you want, you should go to someone who has bookmap, like maybe Joel. If he has a recording, he can show you if he's nice. But you and I, at least you and I, we both share tape. We
Mhm.
both share the time here, and we both share the size and the price action. So even if you don't see this, you can see all of that in the tape anyways. The tape is the leading indicator for what price action is. Whatever the graph shows is always going to be delayed. Whatever the volume shows is going to be delayed. But the
Yeah.
tape will be always the thing that you want to watch out for. And I'm not sure, I forgot. Feel free to ask Jay or someone. I'm not sure
Mhm.
if the book map is slightly delayed from the tape as well, but you can never go wrong knowing how to read the tape.
So so the volume is not a good indicator because sometimes I see that on like high volume it will still like stuff, right? And
Yeah,
stuff like that.
sometimes it goes up, right? And the volume, you see the volume like climbing like this, boom, 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 and then all of a sudden, boom, it stops,
Yeah.
and then this huge green candle volume, huge green volume candle, now turns into a huge red volume candle, right? So that's another thing that you need to look out for. You don't want to base that on the volume. You want to base it on the price action, the level two, book map, whatever you see in book map. Feel free to figure that out.
Okay. Yeah.
But
Yeah.
you get what I'm saying? So let's
Yeah.
continue. Unless you have other questions, we'll go to that second trade that you made and why I also
Mhm.
thought that was not a good trade. So 246, 247, you said was your level. Look out for because that was high day. So we'll keep watching that. Right now, I don't really care what the price action is showing. Right, this is one thing I was trying to tell you. Right now, it's in a mid range. Right here, I really could care less what the price or the tape is saying. I'm
Mhm.
paying attention to it, but I'm not 100% on it. What I am interested in is that 247 for 246 level. So I'll watch it, but I'll be like, whatever. I don't
Mhm.
really care. I'll wait for it to get to 246, 247 area, and that's when I'll watch it like a hawk. So my mental cap isn't getting shredded bit by bit by being so focused on every single thing. You gotta preserve it for the right moves. Okay, it's above 240. Okay, I'm gonna look for 246, 247. Green candle or green tape, looking pretty strong, holding that 240 level.
Mhm.
Candle's about to close. Oh yeah. Also another thing, when the candle's about to close and it already did a stuff move here, I think this is where you shorted, right? Maybe. Um, and candle's
Mhm.
about to close, and it's closing at literally at its high of that candle, bro. You can bet, you can bet that this is gonna go up even more,
Yeah.
especially after this trap move, this trap wiki move here, and it's closing, and it's 56 seconds, so 4 seconds left to the close. Ridiculous. It's gonna keep
Yeah.
moving up. So let's move. Continue. 246 breaks up, breaks above it, 247. Look, it's holding that 247.
Mhm.
Breaks down below it. But look how far it breaks down, only 2 cents. And it's holding that 247 area. Okay, 242, and then boom, immediately goes above 240, 245, it goes to 247 again. As soon as it broke down, it goes to 247. That's not a simple stuff move that you saw in market open right here. Compare the two. Always compare. Watch the tape. Watch bookmap. Watch how the action here differs from something as simple as this, right?
Mhm.
Like, what is this? This is stupid. This is not easy. Okay, red tape, but holding that 240 level, you want a fast rejection past all of that. The best stuff moves happen in rejections that are too fast for you to enter. And look, it's at 248 again, 247. It's tested that multiple times.
Yeah. It's
It wicked
just
again too, right here. Make it look weak. But in reality, it's holding that 240 level.
yeah, it's
It's
just
ridiculous.
grinding up.
Exactly. It's ridiculous. I'm not shorting that. Why is Jay shorting this? Because that's what I was thinking. Like, what he's seeing is not what I was seeing. And then I adjusted my trend line. But anyways, red tape, 240s, going down again. Okay, that's a good move. It closed, new candle started, and it's lower. Okay, maybe it's gonna do something again. Not entering still, but it's at 247. So that wasn't very convincing. Oh, now it's at 250, which is a half dollar mark. Another important area to consider. And look, you rejected, but you saw the green.
Mhm.
It went down a little bit, holding that 240s, and then boom, it pops at 253. That's a common level, right? Where it goes. Where's my drawing thing? This is 250 or some kind of daily resistance level. It does this, right? And then this is 245. It does this, holds there, right?
Yeah.
It's what was happening here. You can see this on bookmap too with the circles, and it's
Mhm.
also like a tick chart kind of. Is that it's absorbing the size here, and this is where you can probably see the green candle, the green circles and all that. It's absorbing all the ask, and then what's typical, and you saw this just on the level two and tape, is it goes down, right? But this is the key area, 240, because or 245, let's say, and it's okay. That's a good sign. It's breaking down, but wait, why is it holding that? Naturally, you want to see it. Oops, you want to see it like do something like this, where it just breaks down and it's
Mhm.
too low for it to reclaim. Now, obviously, it can do that, but that's a different story and different type of level too. Um, but it's holding that level, and okay, and now because it absorbed all of these sellers here, now that's going back up to this 250. There's not as much that they need to absorb, and so it just boom, it goes up like that. And that's what happened with the 240. That's what happened with the pre-market high right here. That's what happened with the 246, 247, and this is now it's happening to the 250, right?
Yeah.
So watch. This is the last time.
So it's just that it's
Rejected.
holding dips, right?
Yeah, yeah, yeah. It
Yeah.
broke. It hit that 250, absorbed it a little bit, went down a little bit. Boom, all that 250 in size prior to when it was trying to absorb it, all gone. So it just got price skipped past 250, and so it's gonna keep going. And watch too, like this is another reason why level two is a leading indicator, or not level two, tape is a leading indicator compared to chart. Look what the chart is showing: 243 price, right? This is toss. You're using toss, so this is prevalent to you.
Mhm.
Volume isn't showing up. Look what price it is currently: 247, 240, 248, right?
Mhm.
And so you're not gonna make. You shouldn't make decisions based off what you see in chart, what you see on volume. You need to be reactionary to what the tape is showing, and that is this. Okay,
Mhm.
so focus on that, and for your book map, if it is as fast as the tape and other stuff like that, you should confirm that. That's really important. Then you can
Mhm.
look at book map too, um, but the tape is the most important. You can't like for S&B, 7 Point Capital, all that. They're not gonna hire you if you can't read tape, because that is the leading indicator. and I keep saying
Mhm.
that. So I'm sorry if I sound like I'm repeating. But
No, no, it's good.
yeah, so
It's good.
stuff move at the 250. At least that's what it shows in graph, but it's actually right at 250. So don't base it on the chart. Breaks at 250, holding that area, absorbing it, went down a little bit, still holding that, now absorbing it even more, right? Breaks past it, absorbing a little bit, holding that area,
Mhm.
looking really strong, and boom, it tape speeds. This is how you know the volume is going to be strong because of the speed of the tape. Watch how, it's kind of, when it's absorbing that 250 area, look how slow the tape is a little bit. It's not really slow, but watch how it speeds up
Mhm.
here too. Boom. There you go. See?
Yeah.
That's indicated, and that's a good indication by the leading indicator that the volume is strong. The speeding of the tape, 260s. Now it's cutting through those, and I I didn't adjust the chart. I was looking at the level 2 and tape. Okay, there it is. But do you see what I mean? This is what you need to look at in regards to levels. You need to know where the levels are, which you did. You identified that. The pre-market high, 246, and then also the psychological level, 250. Then after you identify that, which by the way, you have an edge over me because other than what I see for bookmap, you can see
Yeah.
the heat map, right? That's what Jay was looking at. That's why he was so convinced it was a good short
Yeah.
because he was looking at bookmap, seeing the heat map, and he was trying to see if level 2 would react to that. But I guess today it just wasn't his day. So heat map gives you another level of understanding as to where the buyers and sellers are. Where I have to figure it out right as it goes, right as it happens on tape, you have that edge where you know where these levels are ahead of time. So you
Mhm.
don't you for me you and Jay would disagree, but it never worked for me. You can and you've probably done it too, where you saw a trade, right? You saw the
Mhm.
book map and you saw these heat map, right? And so at market open, you're like, oh, because this is red, I'm gonna short it right there. But then, boom, it goes past that, right?
Yeah.
The
Yeah.
heat map, the heat map on the book map, because I had book map, so I know how to use it well enough. The heat map should give you an idea of roughly where you want to enter, but that in of itself shouldn't be your reason to enter. That should be a variable in a bunch of variables,
Yeah.
which is a checklist, right? That I want you to identify, and so like where you need to check where the more variables add up to your favor to enter your position there, the more likely that trade is going to succeed.
Mhm.
And that's what I need you to do, and that's why I was talking about like I think they misunderstood me. At least for the front side here, I was talking about that. Um, you need your exits are important, but your entries need to be important too because again, if your entries suck from the very beginning, no matter how good your exit is, it can only be as good as your entries are,
Yeah.
which it sucks. All right, so
Mhm.
no offense.
No,
I do,
no,
I do, I do it too.
none
So
taken.
you need to look at that. You need to watch a lot of book map and then tape. And I'm biased towards level 2, so maybe learn a little bit of
So,
tape.
so I think because the tape is so strong, it would naturally hold the dips. But usually, cause my thinking was that because it's because it did go down and because like the bars did reject, but because of
Yep.
the tape that is strong, they will hold up.
Yeah, but again, you're using when you say that, you're only telling me one variable. Oh, it went down. Okay.
Yeah.
But what's the other variables telling you? That's one variable that's in your favor. Okay, that's one checklist off. But what about the fact that it's holding that key area? What about the speeding of the tape? What about the time in which the candle is currently at? Are
Mhm.
those in your
Yeah.
favor? And like I'm not sure if you're doing it through Excel or in a paper or something like that. That checklist, you need to be able to do that fast enough in your head so that
Yeah.
you can
True.
uh, microsecond decisions, because you're not gonna be able to think to do the checklist manually fast enough as the price action is happening. So you need to train yourself, and this is through time, to be able to think of all of those variables as it goes. I'm not perfect at that yet. I'm
Mm-hmm.
still working on that. And it's been what, 2 3 years of serious trading, and then 5 years of like me as a total as my trading career, and I'm still working on that.
Mm-hmm.
And so, um, this is your what is this your first year of trading?
Uh, so like I have 1.5 years, but I started live like last 2 weeks.
Okay, that's fair, dude. My one and a half by my career, 1.5 years, 2019. I was still in college, and I was barely really trading at all. I never traded
Mm-hmm.
paper. I always traded live. The knowledge you have compared to when I did, I had at 1.5, way more, and you also have more resources,
Yeah.
like me, like Mugen, like Jay, all of that. Where I had Timothy Sykes, and he sucks balls. For real, like
Yeah.
he taught me nothing. I never traded any of the tickers that he put in his watch list because they were all OTC. He always said, never trade big caps. You can't do it. It's impossible. He sucks. Anyways, so you're in a better position right now
Yeah.
with better resources to do it. So by the time that you're in my year, this is my 5th year, 3rd year being serious, bro,
Mm-hmm.
you'll be making way more than me probably. And so I don't want you to feel like, oh man, I'm feeling pressure,
No, no,
because
no,
you
I'm good.
and it's
Yeah.
right, you do feel pressure, and you should
Yeah.
feel some kind of fear over that, because that'll help push you more and motivate you to keep
Mm-hmm.
working. But don't get scared out of like small cap because of one loss or one max loss day, because
Yeah.
no offense, this is going to happen to you even within a year or 2 years or 3 years, because it happens to me now. It happened with Jay, and he's in 20 years. And like Alex Self Trade, remember I shared his Twitter where
Yeah.
he made 800,000 in 2 years, and he was about to make a million. And then literally in one night, he did two overnight holds, and he lost 95% of that.
Yeah.
If you think this is bad, man, watch.
Yeah.
It gets even worse when you know what you're doing, know more about what you're doing, and you still fall into it. And so the point of the game is longevity, which you did correctly. You have a stop loss. I didn't do that until this year. I That's why I lost the 2 grand, way more than I ever wanted, because I didn't
Mm-hmm.
have a broker stop loss, max loss. So I think you're in a really good position. Try not to uh, feel too bad. I get
Yeah.
that, and that's understandable. And if that happens, go to Mugen, go to me, any of
Mm-hmm.
us, and we'll talk to you, and we'd love to
Yeah.
talk to you about that. But try not to get so discouraged that you're gonna start. Oh, I'm gonna do big caps now. Oh, I'm gonna do swing trades now. You need to
Yeah.
focus on one over the other, because if you're gonna try to switch like that easily, trust me, big caps is easier, sure, but it has its own set of problems that you yourself have barely even dug. You spent 1.5 years in small cap.
Yeah.
When you switch to big cap, you're starting at 0 years pretty much. When you swing trade, you're starting at 0 years again. So
Yeah.
if you think you're not going to have any bad trades on that, sorry to tell you,
That's
it's
true.
that's those are hard too. So
Yeah.
hopefully this helps. Um,
Yes, it
Again, the
did.
psychological aspect very important. The fact is, you were after that Husa trade, you said, "Oh, I'm feeling emotional, and so I should get out."
Yeah.
Listen to yourself on that, right?
Yeah, that's true.
So make rules on that, the psychological aspect too, not just the trading, and don't be afraid to miss something like this out. Have it be recorded, and watch the price action. Watch the book map if you have that
Mm-hmm.
recorded as well.
Definitely. Definitely.
I'm just drawing random lines at this point. So,
But
you,
Mark,
yeah,
thank you. Thank you so much.
yeah. If you need more help with the level two or the type, since
Mm-hmm.
you're using bookmap, I'm probably not as much of a help on that regards.
No,
But if
no,
you want
no,
to
it's
know why
fine.
price action works the way it is and how to find simpler trades, feel free. If I have time or I'm not tired because I'm always sleep deprived,
Mm-hmm.
um, I'm happy to do this Zoom call again, and we can help because it helps me and solidify my knowing of it too. So don't be afraid to ask. Okay.
Okay. Thank you, Mark. Thank you, man.
All right.
It's
It's been a long
really
day,
nice
so
of you. Yeah.
take a break. Okay. Okay. Good work. Let's see you. I'll
All
see
right.
you next week or
Yeah.
Monday if you decide not to do anything tomorrow.
Yeah.
Okay.
All
Okay.
right.
Have a good one, buddy.
All right. Bye, Mark. Thank you, man.
Okay. Bye bye.